this revision is actually designed not only to strengthen your technical understanding of this subject, but also want to sharpen our analytical and professional skills that are required to be able to pass this exam. And strategic performance management is this paper is highly practical and is in accordance to dynamic environment that we are operating in. Okay, that enables organization, of course, to measure the performance, to evaluate strategic decisions, to manage risk, and achieve long-term objectives effectively. And therefore, the success in this paper, it requires you more than memorization. So it demands also your critical thinking, sound interpretation. They want the practical interpretation and the ability to apply the concept in the real business situation, if I can say. So during this revision, we shall focus more on key examinable areas. And, this paper has a lot of topics. And most of them, the way books is, most of the topics, we have to cover everything. But there are some topics that when you look at it in the book, does not have much more stories there. So we go the way it is, such that you can cover them. And we shall look at the examination techniques. How do we approach with the question? What do we need? What are we required to do there for us to let's say, you have 3 hours. The way the paper is 3 hours and a half. So what you should do, it means you should not waste the time when you are doing exams. Stop wasting your time, spending, let's say, much time on something you don't understand. Okay, so we're going to look at the examination techniques. We will see it, and the practical scenarios, and the professional presentation of your answer in line with the examiner's expectation, in line with CPA student that are expected to answer as per the question they have been asked. So I encourage everyone to participate actively, ask questions where you see you don't understand. You can type in a comment section box. You can give me a question, I will answer. You can actually ask a question, I will answer. And then I want and the approach we'll be using, I want all of you to have a confidence and determination when it comes to planning. So with proper preparation, I assure you that if you prepare well, you continuously practice, passing this paper will be very easy to you. Okay? Proper preparation, discipline, and continuous practice. So passing this May 2026 sitting is absolutely achievable. So I wish you all productive and successful revision session. Now, as you see here, our presentation. Let's start on. I wish I could say what compose these courses. It is mainly 4 parts, if I can say, but you cannot say 4 parts only, because it is not only 4 parts. Okay, but if we say 4 parts, no worries. Okay. Let me explain this way. It is not actually 4 parts, but we can say 5. We're going to focus on costing techniques and how do we do pricing of a product. That's part 1. The second part is the second part will be decision making. Okay, it will be decision making, and then the last part, sorry, the third part will be planning and controlling, and then the last part is performance measurement and evaluation. That is 4 parts, main ones. So other things we'll be looking at the emerging trends in strategic performance management. So if I can repeat, it is about costing methods, costing techniques. How do we do costing of a product? That is our past 1, plus pricing decisions, approaches, and strategies we can use Those are part one. Okay. Then in part two, I said it's about planning and controlling. This is about preparation of the budgets, and also we do different approaches of the budget. We see the traditional budgetary system, how the modern ones. We will look at also variance analysis in terms of controlling, okay, where we'll be comparing actual performance versus planned performance. Then we can be able to draw a conclusion on the variance. That is the second part. That is the third part, if I remember. Then the third one, we said, is the decision making. Okay, I said it as a second. You can also put it as third, decision making. You need to make a decision. So we'll be looking at decision making under different environments. We see environment of certainty, uncertainty. We look at environment of risk, environment of competition, and what are the techniques to apply there to be able to make a decision. And then number us is about performance measurement and evaluation, where we'll be measuring the main concept or the fundamental thing, or the focus will be to measure the divisional performance. And if it comes to divisional performance, we'll be also discussing about transfer pricing issues. And then we look at what we call value-based management. And in divisional performance measures, we'll be looking at return on investment, residual income, economic value added. As I said, also, we will be considering also the transfer pricing issues. Then we go to evaluation, performance evaluation system, where we'll be looking at balanced scorecard. We look at different management approaches. We go to value-based management. We look at benchmarking, the way you compare yourself with others to be able to improve in terms of performance. Then we see the current development in strategic performance management as the last thing. Okay. So without taking much time, let's start with the costing approaches or methods and the pricing decisions. Okay, how do we do price, or how do we set a price decisions? What are the approaches? What are the strategies to go on with? And also costing. So in costing, I'm going to start on activity-based costing. I will go to target costing. After we go look at life cycle costing. Okay, life cycle costing. After it, we look at the throughput accounting. We look at customer profitability analysis. We will be looking at, if I can say, simulation model. How do we do it to be able to say these are also, can say, how can we manage let's say a weekly cost, let's say in terms of management of inventory, management of revenues, those monitoring of revenues like that. So by using those techniques, we can look at also backflash counting. We'll be looking at how do we measure performance in a throughput accounting, throughput and decision making, like that. So let's start on activity-based costing. So if we talk about activity-based costing, I want to link it with what we call traditional costing approach, traditional costing methods. In traditional, we were using absorption costing. So I want to link this absorption costing versus ABC. What do we need to know there? So activity-based costing, when you see here on our presentation, ABC is an alternative approach to the traditional methods of costing. The activity-based costing approach is aiming to link the overhead cost to the product or service that causes those costs, okay, by absorbing those overhead costs on the basis of activities rather than on the basis of production volume. That's about ABC method. Now, if you call ABC, when we are in ABC, there is a thing we need to understand. If you don't understand, my friend, it will be very hard to you to work on a question, because you not be having a math fight on what ABC requires you to know. ABC, let me talk this in two ways. We need to understand what do we call a cost pool. A cost pool, Rugero, it is an activity that consumes a resource and for which overhead costs are identified and allocated. What does it mean? Here, it means an activity should have a cost. an activity, let's say there is an action in a company, okay? There is an activity happened. There is a money we spend on those action, on those activity. Okay, it is activity happening for us to be able to produce a product. And then we say that the overhead cost, you can identify overhead cost relating to that activity, and you can allocate to specific cost center. If we say specific cost center, it means we can charge it to specific department, to specific part, to specific unit, like that. So for each cost pool, there should be a cost driver. So for all those costs that happened, there should be what causes those costs to happen. We call it a cost driver. Cost driver. So a cost driver, it is a unit of activity that consumes resources. Example, imagine if we say we bought, let's say we purchase or we bought an electricity. There was an electricity expense or overhead, let's say costing us 10,000. That is action of purchasing that. Okay, let's say we purchase electricity. Now we want to see what causes those consumption of 10,000 electricity. It might be because of rights, number of rights you have. It might be because of, let's say, machine consumption. So that's what you can call a cost driver. What can cause those electricity to increase or to decrease? Their consumption can increase or decrease depending on these cost drivers. The more of it, the more expense you'll be incurring, the more overheads that you'll be incurring. I think you understand what you call a cost driver. Here, in terms of a cost driver in practice, what I want you to have in your mind is this. A cost driver, it is a measure of that activity, or it will be a basis of apportionment for that overhead. We call it a cost driver. So a cost driver, in another word, we say as a factor that is influencing a given level of a cost to happen. Let's say if our cost is, let's say, supervision, what can cause the supervision cost to increase? It might be maybe depending on the number of supervisions we have done or number of inspections we have done, okay? But not depending on a number of production, but we depend it, the cost is increasing depending on activities you have done. That is a factor you are talking about that can influence the level of a cost. It is called a cost driver. Now, that's about ABC and the cost driver. How do we calculate a cost? They say calculation of a cost per driver and per unit using ABC. These are steps you need to go when you are establishing or when you are applying a system of activity-based costing. When you are implementing activity-based costing, these are steps to go ahead. You know, they might ask you as a, say, a qualified consultant, as a specialist, analyze the scenario given in a question and tell the examiner how, or tell the, let's say, the board or the people who have hired you, they may ask you to advise how they should implement activity-based costing. You know, when you are to implement it, these are the steps you should go on when you are establishing this ABC system. First of all, you need to identify activities that consume resources and incur overhead cost. And you allocate the overheads to the activity that incurs them, okay, to their cost pool. Then determine the cost driver for each activity or cost pool. Then collect the data about the actual activities happened for the cost driver in each cost pool. Then you calculate the overhead cost of a product or a service. So this is done by calculating overhead cost per unit and per unit of the cost driver, and then you do allocation. So overhead costs are then charged. When you do, the allocation I'm talking about is when you are then charging the product or a service on the basis of activities used for each product or a service. Okay. Now, what are the advantages of ABC? Advantages of ABC. ABC has different advantages. It provides, all right, it provides much better understanding into what causes overhead cost. Urugero, we might be having, imagine if they told you, analyze the scenario of this company and tell them what causes the cost to increase, what causes the cost to be out of the control. When you use ABC, you can understand what causes this cost to increase. You say, this is because of much activities happened there. Maybe it is necessary or not necessary, depending on the analysis, but it can give a manager, it can give somebody who is applying this activity-based costing better insight into what causes the overhead cost. Okay, and it will recognize that overhead costs are not all related to the production and sales volume, and overhead costs are important, and the management needs to understand the drivers of overhead, the causes of cost, in order to be able to manage their business properly. So ABC can be applied to a complex business environment. That also is its advantage. And ABC can be applied to all overhead cost, not only production overhead. And it can also be used as easily as it is in a manufacturing business. It can also be used in service costing. It can be used by organization that involving in manufacturing of a product or that also provide a service. We can use also ABC. So it is of advantageous. Now, what are the disadvantages of activity-based costing? The disadvantages lies in ABC. Number one, it is impossible to allocate overhead costs to specific activities. Sometimes it is not possible for you for some overheads to allocate the cost for different types for some activities. It is very hard to do that. So the choice of activities and even cost drivers, when you are choosing this is cost driver that can be best for this when you are allocating, when you are allocating, let's say these activities, the cost driver is this. Sometimes it might be inappropriate because the choice of it bases on assumptions and sometimes involves simplifications. So it might be inappropriate. That is the disadvantages. So then the ABC, it can be also complex to explain to the stakeholders, to explain sometime to the people for them to understand activity-based costing, the principles. It might be complex for those who are not familiar. And the benefit obtained from applying, that is the cost benefit analysis, you might be applying ABC to the organization, but when you look at the benefit obtaining from changing your costing method to ABC, it might not justify the cost you spend there. So it ends up being of no importance. So the benefit obtained from ABC might not justify the cost you spend in application of it. That is the reason now. So I think we can work on example, and that is where we can be able to understand. That is when we can be ready, such that we say, oh, now activity-based costing, I'm safe, that this costing approach, I can know it. Now, let's look at what are the implications of switching to ABC. If we change our costing method and we say, now ABC is good, let's go to ABC. What are the implications of switching to ABC? It's because of the benefits we get from ABC. Number one, we say if we do a pricing of a product, when it comes to pricing of a product, it's about, okay, if you determine a cost, we have different ways of determining prices of a product. But if we are pricing a product basing on cost, or when it is a cost-based price, it means you'll be taking total cost plus a profit, or your profit might be a markup or a margin. And if you add a profit or a markup, okay, let's say even a margin on your cost, you'll be determined, the end result will be a selling price, the price you are willing to sell the product or the service. Now, you apply, if you base on activity-based costing, because we have seen that it produces a real cost data, the realistic cost data, depending on what causes the cost, whatever has more cost, also whatever has more activities also consumes more cost, if we can say now. So pricing of us will be based on more realistic cost data. That is the first implication. That is the first benefit you'll be getting if we switch to ABC. Again, if we determine a sales strategy, it can be more soundly based. So because it bases on actual activities happened with relating to their cost that is needed to be happening now, or to be incurred. So the performance management and even decision making, it can be improved because we understand more our cost structure. If the cost is increasing, we know what causes those costs to increase. So if you are to measure the performance and even to make a decision, so you have better information, have more information. So to make your decision, your decision can be very good, which means you improve your decision making because you made a decision depending on the real information. It increases accuracy also in the cost allocation. It will help you to charge a cost to different cost centers, but in accurate way because ABC assigns overhead cost based on the actual activities rather than using the broad allocation base like we go to labor hours or machine time, but you don't know the basis of it. It does not relate to the it is not linked or it is not aligned with the cost that is happening. So that is what we call a broad allocation base. So this leads to more accurate product costing if we use activity-based costing, as it will better reflect the true cost incurred by each product or service. And also it will help us to improve a decision because ABC will provide managers with better insight into the profitability of individual products and the customers and services as well. So it can also help you to determine or to let's say to deliberate or to conclude on this product is more profitable than this depending on its activities happening there, depending on its cost it incurs. Or you can determine for each customer or for each service you provide to them what are the profitable ones. It can help you to make those decisions. That is the implication of switching to ABC. Now here we have an example. This example, before we go to this example, okay, after this example, look at past paper. But before we go to this example, let me also talk about absorption costing. Absorption costing, sometimes we call it conventional method or traditional costing method. Why is it called traditional? Traditionally, there was no much technologies. It was labor-intensive technology in production. A lot of people were involved there. But now, today's environment, we don't need much people in production. What we need, okay, is what happens there is more overheads relating to the machines. The things are automated, okay? The environment has been changing. Now we are in like capital-intensive technology, not in labor-intensive technology. Because traditionally, there was in labor-intensive technology, they assumed that the all cost were basing on the, let's say, labor hours. We paid the labor or we incurred the labor cost depending on the hours they used to produce. They are the tech to, let's say, to be able to finish the work they assigned it to. Now, in modern environment, it is not the case. It might be depending on different bases. The people charge you depending, we can allocate our overheads depending on what causes them. That's when we'll be fair. Okay, so which means, okay, if you'll be having a question, you can type it in the comment section box. I will be able to answer. And what I'm saying, in absorption costing, it was assumed to use labor hours. Unless examiner says that you have to use, let's say, machine hours, or the company were using this basis of apportionment of their overheads in general. But we are at the time assumed to use labor hours, unless they say use machine hours or use this method. I told you the logic behind those traditional absorption costing. Now, on ABC system, it is another story. Okay, now let's work on this question. The question is saying, Y Limited makes and sells 2 products, plus and double plus. The direct cost of production are 12 for 1 unit of plus and 24 per 1 unit of double plus. Information relating to annual production and sales as follows. We have plus and double plus. We have annual production and sales. We have the direct labor hour per unit. We have a number of orders, number of batches, number of setups per batch. We have special parts per unit. And the information related to production overhead cost is as follows. We have, these are the activities happened, setup cost, special parts handling, other material handling, order handling, other overheads. Then these are the cost drivers. It is given, as you see in this question, it is given. They assigned it. They say when you are apportioning setup cost, this is an activity of doing setting up of, let's say, a machine or whatever. Setup, it costs this money, 73,200 on annual basis. Okay, this is annual cost. But the cost driver, they say, a basis of apportionment, okay, or the factor that influences this cost to happen or to increase, or okay, if we say to influence, it means what causes it to increase or to go higher or to go low, depending on the analysis they have done. It is number of setups. Of course, you have to go with number of setups. So the more the number of setups, the more the cost will incur. Okay, the more the money we will spend. Then special parts handling, they say to use number of special parts they handle. Then special other material handling, they say to use number of batches. Order handling, they say to use number of orders. That is the cost driver. You know, when we are doing example, that is when we understand what does now this approach says. What does now, let's say if this is a costing method, what does it mean to us in real practice? What does it tell us? Remember, if you remember what I told you, I said this paper, okay, the performance management strategic, okay, the strategic performance management, you will be examined. Remember, we are in advanced, so you will be examined, okay, to measure the performance of something or to evaluate a decision of the people that they have made, or to critically assess it or evaluate them. Okay, again, we are not only required to determine, let's say in general, this is the cost of a product. No, you need, first of all, also you will be required to think about something and you can interpret. So that's why I am emphasizing on understanding what we are talking about. When we do the example, that is when we understand more. When you do example, that is when we understand. So as you see these examples, it will help us. And also, as we move forward, you will go also, you will understand what we're talking about. Now, other overheads, you see, we don't have a cost driver for other overhead. But they say the annual cost is a 216,000. Other overhead costs do not have an identifiable cost driver, and in ABC system, those overheads will be recovered on a direct labor hour basis. Required. Calculate the production cost per unit of plus and of double plus if the company uses traditional absorption costing and the overhead are recovered on direct labor hour basis. Okay, now the examiner told us what to use when we are doing traditional absorption costing, but if they are silent, they say determine or calculate the production cost per unit of plus and of double plus if the company uses traditional absorption costing and they stop there. You are 100% allowed to use the direct labor hours, because we said in traditional way they were supposed to, let's say they used to allocate the overhead depending on the labor hours the people take to produce or to finish their task. They use the labor hours because it was in a labor intensive. But if the examiner says use machine hours, you have to use machine hours. If they say use this type of absorption, you have to use that absorption basis. Okay, you have to use that basis of apportionment. But it is an implied thing, or it is generally known as, it is like a principle. It's not even let's say it's not a principle, but it's generally known that when they are silent and you are using traditional costing, you have to use labor hours, unless the examiner specifies or the question is telling you what is the avoid absorption costing, the avoid absorption basis, the apportionment basis. If the examiner says you have to use this apportionment basis, that is what you should go on with. Okay, but because it depends on the policy of the company, but in general, we have to use labor hours. Okay, I hope this is clear. Now, calculate the production cost per unit of plus and of double plus if the company uses ABC. Let's go in Excel and work on this. Okay, I'm putting the question in Excel so we can work on it. And after this example, I wish to go to past paper, and also let me have that question on past paper. We'll be talking about I'm pasting the question.
This meeting is being recorded.
Hello. Okay. I'm going to project the Excel file. I put all the questions so you can work on it. Now, I hope you can see my Excel file. Yes. They're saying the screen is not displaying. Okay, I have shared. I was pasting the question there. So it is our working document. Okay. We will be working. I hope you can see the Excel file. Now the file has come, and I hope you can see it. Okay, I hope you can see this example. We have already did it. We did only to work on it. Okay. Okay. Now, so can you see the screen? Please confirm. Somebody confirm here. It's okay. If you are able to read the question as it is in Excel file, so we can work on the space, the left one. All right. I hope you can see the screen. Now, let's go. As they said, they tell us that we need to use ABC and traditional costing. So now, let me remind you on what we have already discussed on activity-based costing. I said that in activity-based costing, you have different steps when you want to implement activity-based costing. Okay? Now, I'm going to remind you again those steps, but we're not going through that 5 steps. No, I only require you to know these 2 steps. If you know these 2 steps, you are safe for activity-based costing. And whenever it comes to a question of activity-based costing, when you are collecting past paper, when you are doing a question, wherever else you will need ABC, this is the approach you should use. Okay. Number 1, you need to determine cost per activity. cost per activity. There, it means that you have already identified the activity in the question. This is activity, and the activity should have a cost of it related to it. Okay, then you determine a cost driver of it. Then you determine now cost per activity. Then the second one will do allocation. The first step is to determine cost per activity. Then the second one will do allocation. As you are seeing here, let me show you how do we do cost per activity. You take total cost, okay? Total cost of activity. Total cost of an activity. Then you will divide it, okay? You will divide it by any question. Expand the screen. I hope now I have expanded. I hope you can see. Okay. I hope you can see. I'm trying to expand so that you can see. Okay. So what I'm saying is this. We need to determine, first of all, cost per activity. We say total cost over total number of activity. This is total number of activity. So you get cost per activity. You see, total cost of activity over total number of activities, or number of activities. Total number of activities. So you get total cost per activity. Then number two, we do allocation. We'll do allocation of those costs to the respective cost center. Allocation. Let me give you an example. Let's say our activity is electricity. Okay. The cost for electricity, let's say it is 10,000. That was the example I was using, if you remember, 10,000. And let's say the causes of it is let's say what we have done analysis. Then they say a cost driver of electricity, or the cost. Let me not say cost driver again. Let me say the activity that, or the factor that influences this activity to this cost of electricity to incur. Let's say it is now number of rights. The number of rights. So we can have, then let's say we have, let's say, department A, you have department B, and let's say we have department C. Okay, let me say X, Y, and Z. Let's not use A, B, C. Let's use X, Y, and Z. Now, these are the departments. And let's say the number of rights in the department X, let's say they have 10 rights. And let's say they have here in Y, this is an example. Let's say in Y, they have 5. And let's say also here in Z, let's say they have also 5. Okay, let me say here 6, and let me say here 4. Okay, now can we determine this cost per activity? It means this is cost, this is money. Okay, this is money. Cost must be money, But the cost driver, it does not necessarily require to be money. It is a unity. It is like how many number of those things they say. As you see here in the question, in this question, look like they say number of orders. What they give us is number of orders. If they say number of batches, what they give us is number of batches. This is the number of batches we have. The number of setups per batch. This is the number of setups per batch. This is not money. But when they say setup cost, the figure they give you here is the cost, is money. Okay. Now I'm saying we need to determine the cost per activity. What is the total cost of this activity of electricity? That's what we're going to determine. First of all, cost per activity. Okay. Cost per activity will be this 10,000. Okay. 10,000. And to determine total number of activities, so you're cost driver yacu, number of rights iri correct or appropriate basis of apportionment, or appropriate cost driver. It is number of rights. So we go here and say, I will divide number of activities, total number of activities. There you go. That is depending on the basis of apportionment. I say 10, that is rights in department X, plus number 4 rights that are in the department Y, plus also 6 rights that are in the department Z. I hope these things is you can see this. Now, cost per activity, remember this is money and this is number of rights. It means what I'm going to get, it is 10 divided by The total of this, which is 20. So it is 500. It is 500. This is money, I can say, 100 francs. Let's say this money was in 100 francs. Okay, let's say this was 100 francs. This is 100 francs per what? Per right. Per right. Okay? This is the number of rights. Now we get 500, 100 francs per right. Now, what I said, this is the first step you need to understand. If you know this, you are safe. This is cost per activity. You are safe in terms of when it comes to activity-based costing, you can handle whatever question, wherever it comes from. Then this is cost per activity. That is number one. Then we're going to do allocation as a step two. We said, and I told you that you need to understand cost per activity. How do you calculate it? Then number two, it is allocation. Okay. Then this is how we determine cost per activity. Then let's go to cost allocation. Cost allocation, it is also simple. What I can say is we're going to do like this. Okay. I hope you can see this. I'm going to allocate it to department X to the respective cost center, department Z, department also, if I can say, I'm going also to put here department E. This is the allocation I'm talking about, okay? Here, this is department X, this is department Y, okay? This is department Y, this is department Z. Their cost, we have to charge them, okay? It will be, look at here, like on kubigenza. Turafata, this 500, we multiply by this 10, that is in X, okay? Then we take this 500, then we multiply by this 4 for Y. Then for Z, their cost to charge them, we need to take this 500, it's per right, then we multiply by this number of rights in Z, which is 6. So now I can say here I'll take 500 times 10. I get the figure. For Y, I'll be also taking 500, our cost per activity, then I multiply by 4. Okay? That's what I'll be saying. Okay? All right. If you have a question, please, you can ask me to okay, I will answer. Now, let me also come here on Z. It will be 500 times 6. I hope you are understanding now. So, what I'm going to get here, it is 500. Of course, you see, it is this. Then I multiply by this 10. Okay, this is the answer. Here, it will be this is 2000. And here the answer, I'm sorry, the answer will be 3000. So if you add them, ubiteranyije byose bigomba guhita bigusubiza kuri ya cost yose wari waroketinga bya bihumbi 10 nibyo ugomba guhita ubona ahangaha. Mwabibonye? So bivuze ngo gukoresha activity based costing tufata ibihumbi 10 tukabigabanya muri department zitandukanye aho tugendeye kuri activities buri department iba yagiye consuminga bitewe na buri activities yagiye ibera muri buri department cyangwa muri buri cost center. It might be a product, okay, because we can allocate the cost on product. It might be a department, whatever that where we can allocate a cost. So we can identify a cost and we can charge them there. It is called a cost center. Now, this is 10,000. This 10,000, it is the same what you had here, okay? If it is not the same, what you have done is wrong, okay? That is how we do ABC. So we continue to the next activity, like that. That is about activity-based costing. When it comes to traditional costing, now this is on ABC, okay? I'm taking here a brief or what to take away as a key takeaway now. Let's go to traditional costing and we'll go to our question now. Traditional costing. Okay, let's say traditional absorption. Costing. additional absorption costing. This additional absorption costing, what we're going to do on this additional absorption costing, we are going to take, they determine what to call overhead absorption rate. That is what they do. Also, they have also the same steps, like these are the two steps. Overhead absorption rate. Let me explain what is this OAR. What it stands for? It is overhead absorption rate. Then we determine it, then we do allocation as a second step. Allocation. How do you do overhead absorption costing? This overhead absorption costing, tubona dutya ufata total overheads, okay, total overhead of what? Of the whole company, total overheads of the whole organization, total overheads. Then you divide by the basis of apportionment which is appropriate, the one given in question. If they are silent, they don't give it to you. You have to use labor hours. Okay, you have to use labor hours. But if the examiner is specific and told you that we analyze this, you analyze this company and we see they use machine hours, that is when you should use machine hours. Okay, never make that mistake. Never make a mistake there. Okay, so never make a mistake there. So now that is the overheads. Then you divide by the labor hours. Okay, let me not say labor hours. Let me say basis of apportionment. Basis of apportionment. So what relating to those overheads, it means the total of those bases. Let's say we can say now labor hours. This is example. Example, if we are using, so you divide by total labor hours. Okay, I put an example because it might not be labor hours, it might be even machine hours, depends on what the examiner told you. Unless if they are silent, that is when you should use labor hours. Now you get total overhead over labor hours. It means what you get, it will be overhead per labor hours. Then you go to allocation. How do you do allocation? Before I can say let's go to allocation, let's have an example. The total overhead, it might be to, let's say 200, okay, 300,000. 300,000. It is total overhead. Where is it different from the first one? The first one was cost of activity. Remember, the overheads, the totality of all activities. But the total overheads, it means when you sum the cost, you sum setup cost, whatever, the total of it will give you the total overhead. But one on each one, the cost of each one, each activities, it is what we use here in ABC. But in overhead, in traditional costing or in absorption costing, conventional method, we use the total overheads. Then we divide it by the absorption basis. Imagine, let's say the labor hours in department, let's still use the same departments. We can say now we have department X, Y, and Z. And let's say the labor hours, let me say labor hours. The labor hours, it's an example. Let's say the labor hours here, let's say use, let's say 20 hours. Okay. If this overhead is in a year, this is 20 hours in a year. Department X will be having. If it is in a month, this will be also in a month. You have to relate something that are in the same benchmark, if I can say now. So here we can say 30. It's an example. And here I can put also 80. That's an example. Then they use 80. So what I'm going to have, okay, let me use here 70. Let me use 70. So the total hours will be 20 plus 30 plus 70. That is the total hours I'll be having. So here I can determine what is overhead absorption rate. What is my overhead absorption rate? Okay, that's what I'm determining now here. It will be.
There are people that are requiring to enter.
Oh, but they are there. They have joined. Okay. I think everybody is have joined.
Someone is chatting that you allow them to enter.
but it's an automatic. The way it is, it's automatic. Can no, I see. There is nobody here is pending. All the people are there inside. Okay. I hope they have joined. You can, they can confirm if they have joined. Okay. Let's continue. As you see here, we'll be having our 3,000, 300,000 over 120. This 120 is the summation of this. 20 plus 30 plus 70 is 120. So now, here, the brilliant people knows what to calculate. This is money. This is labor hours. It means this is a cost per labor hours. Okay, this is the one in France. Okay, per hour, per direct labor hour, per hour. Okay, with the 1 hour. Okay, this has something it means. Okay, here you have to pay attention. It has something it means. Okay, and you know what causes sometimes the student to fail? It's not about they don't know the concept. You know the concept, but the advanced level what it requires you, the, we can say, much insight. It requires you understanding and interpretation of what you are computing. And we say, if we say 200,000, 200,500, okay, per hour, what does it mean? It means in 1 hour, you are using 2.5, okay, of overhead in 1 hour. That is overhead. That is overhead per 1 hour that is being incurred. Okay, that's what it means. So what the examiner can ask you is not what I'm saying. Examiner can now change you in whatever perspective. They can ask, can you give you this? And they're asking you this total figure. If they give you this and they give you this, can you return this? Remember, you are in exam, you are a candidate there. So the examiner believes that you understood, you have sit and learned and understood whatever required for you to be in advanced. So they can challenge you in all perspectives as long as they are in the same, they are asking on the same concept. It is on ABC. They can give you this and they are asking you this total figure. They can also give you this and this. They can also give you this and this. You are required to determine this. So you should understand. That's why I'm saying understanding is key and interpretation. Whatever you compute, you need to understand what does it mean. Now, in normal life, what does it tell us? Okay, that's how you should be brilliant. Okay, if you want to pass easily, so because to pass does not, it is not what you come because you say I want it. No, you have to work for it. It's not about hey, I tell myself I want it. You have to work for it. So let's do allocation. That is the second step to do this allocation. So we say what should go in y x, what should go in y, and what should go in z. Okay. Yeah, I see the people are keeping increasing, which means it is automatic. The people can join. Okay, now that is X. We have Y, department Y, our cost center, and we have also another cost center Z, where we're going to change our cost. So it means we're going to take still the same case. That is, we do the allocation in the same way. That is 2.5 times 20. The 20 is the number of labor hours in the number of hours they use in department X. In department Y it is 30, and here it is 70. So I'm going to do the same way like that, like that. So here it will be the same story, but I will multiply by 30. And here the same story, I multiply by 40. Sorry, by 70. It is 70. So if I determine the answer, you see, this is my answer. Remember, if I add them, if I add all of these together, it should keep giving me that 300,000 where I started. Okay, this is what shows you that what you are doing is correct. Okay, it is still 300,000. Remember, it is what we have here. Okay, let's go to our question now. This was like to understand what I was saying, activity-based costing versus subscription costing. This is what we have said. Let me call this ABC. and absorption costing. Absorption costing. Okay. Now let's go to our question. Let's answer our question. Okay. Remember, our question was this. I hope you can see. This is our question. You might be forgetting where we was because I wanted to give you an example on what we have said, and then now we can go in practice. Remember this question. I'm not going to repeat it again to read it, but they requires. These are requirements. They say calculate the production cost per unit of plus and of double plus if the company is using traditional absorption costing and the overhead recovered on the direct labor hour basis. It means we have to use the direct labor hour basis as a basis of apportionment. Okay. Then they said number two, calculate the production cost per unit of plus and of double plus if the company uses ABC. This is basic costing. Now what we're going to do, we're going to put here, you need to just determine cost per unit. Let me remind you something. Whenever the examiner is asking you what should be the cost per unit of this product, okay, they're requiring you to determine the cost of a product. Remember, it is what we are learning now by using different approaches. When it comes to determination of cost of a product, you have to think this in your mind. We have to do what you call cost statement sheet. We have to do cost sheet. It is called cost statement sheet or cost sheet or cost estimation sheet, you can say. Let's say our cost statement, it is going like this. This is like a recall. Remember this. So we need all of us to be at the same page. Okay, we need to be at the same page. A cost statement, how do you produce a cost of a product? Whenever they ask you to determine the cost of a product, this is what you should think in your mind. We put here direct material. We go to direct labor, then we put direct expense, if any, if they are there in a question. Direct expense, if any. Okay. Then say you put here your figures. Then what we'll be having here will be total cost, total direct cost, or let me say direct cost. Okay. Now the examiner knows that you know this. They might not give you this, and they give you direct cost, and you keep asking yourself, where should I get direct material? Where should I get direct labor? My friend, you already have direct cost, which means it's composing of direct material, direct labor, and direct expense. So you don't need to go with this because they give you this direct cost. Sometimes it's called the prime cost. Let me call it prime cost. Prime cost. This is it. Then we go to overheads. Overheads in general. Overheads. What we're talking about here in overheads, it's about we have indirect material, indirect labor, and indirect expense. So you might be saying, what about variable overhead and the fixed overhead? That's about you fix you are now differentiating your overheads. This is now variable, this is fixed. It's okay, but it is in kind of indirect material. It might be to the indirect material, indirect labor, like supervision fees. Those are indirect labor. Then indirect labor cost. Then we can say also indirect expense. Most of them are indirect expenses, like electricity. Those are expenses, but indirect. Okay. Then you sum them. Okay, let's say sum them. This is total overheads. Then you sum these two. If I can say, you have total production cost. When you sum these two, this and this, that is when you'll be having in total production cost. Okay. Production cost. When you sum the direct cost versus these overheads, you see what examiner is asking you all the time is about you are adding, you are removing. Okay, so you cannot imagine you are now doing a question and you fail this. It's about additions. You are adding and removing, but what are you adding? It requires you to know it. Okay, that's what you are required to do. all we are required to be having in our mind. Then, if this might be the total for the whole production, then you need to divide, let me say divide by, okay, units produced. Then you'll be having unit cost or cost per unit. If this is your unit of product, you produce, number of units you produce, you're getting cost per unit. Now, it might be unit cost. And remember what they ask us here, it is cost per unit, which means we are going to go through this cost statement. Okay, maybe I write cost statement wrongly. It is cost statement. Cost statement. Yeah, that is cost statement. Now, here, let's work on a question. You see, I give you everything that you need to use. You see, they talk about cost of a product, cost per unit cost. We have to come and look at our question, but this is the approach you have to go through. Okay, now remember our product is called plus, and here we have what we call double plus. So they say let's go to the question again, but we will be answering, we'll be reading and answer because we have already read it, so we are going to wait again, but we are answering. They say why limited makes and sells two products plus and double plus. The direct cost of production are 12 for 1 unit of plus and 24 per unit of double plus. This is direct what? Direct cost. This is not direct material. This is not direct labor. This is not direct expense. It is the total of them. It combines the direct cost. So they give you direct cost. Direct cost. Okay. We have the direct cost in total. Okay. We have the direct cost in total. So we can say we have a direct cost in total. We can say it is 12 and 24. But we might be determining for the whole production. And then after we divide it by the number of units produced, we can go in that way, or we can do per 1 unit, per 1 unit, per 1 unit. But to ease our life, let's ease it and say 12 is per unit. I have to multiply the number of units they produce. You see, they say annual production and sales. Look at here. Annual production and sales. I hope you can see. You can see my screen. Let me try to increase it. Okay, you can see my screen. Annual production and sales. It is 24,000 and this is 24,000 units. So let me multiply by 24,000. Okay, by 24,000. So I can determine what is the total direct cost for the whole production. Okay, then I will go to double plus and see what is there. It is 24,000 and 24 per unit. So I will take 24 times 24,000. So I get 576,000. That is our direct cost. And then we need to come and put our overheads. Nothing I should think in my mind, because after direct cost, what should come there after is overheads. Okay, overheads. Be having here my overheads. So the overheads we're talking about, we are not going to look at this. Okay, please never be fooled by this information. This information will help us to do allocation. These are the information available in a question. As you see, direct labor hours. Why do we need hours here in our cost statement? All the things we have to put is money, not the hours. Number of orders. Why do we need to put orders? Nowhere else, but it will help us because it is information that will help us. Number of batches, nowhere to use it. Sorry, we have where to use it, but not in our cost statement. It is not money. So we go to information relating to production overhead cost is as follows. You see, these are information relating to the overhead costs. We have cost driver, we have setup, special parts handling, other material handling, order handling, and other overheads. So these are overheads happened. These are our activities. Now, that is where we are going to apply our system we have run, ABC system or overhead absorption cost, or absorption costing. Absorption costing. Okay, which now implies that I know some students have already noted this. We use what I want to say is this. We use this ABC, we use this absorption costing to count for overhead. We don't use it for direct cost. we use it only for overheads, to count for overheads. We can say now it is the overhead counting system, okay, or accounting that help us to apportion the overheads to their respective cost centers. It has different principles. A, B, C, we know what it uses, and we know what the absorption costing it uses. That's in another way how we can define these systems, these two systems, traditional and even ABC. So our overheads, as you see, let's use here ABC. Here we're going to use activity-based costing. Here we're going to use activity-based costing. Let's use activity-based costing first. Count for overhead, okay? Let's start on activity-based costing. Okay, let's start on activity-based costing. Let's use activity-based costing here. Then after we go to traditional costing, okay? When you use activity-based costing, you need to write all of these activities the way it is. You first write it. We say setup cost. We have special parts, handling, have other material handling, the material handling. We have order handling. I'm sorry. Order handling. Then we have other overheads. Okay. Setup, special parts handling, other material handling, order handling, and other overheads. These are all our overheads happened. That is in ABC. Then in absorption costing, we'll be having only overheads. In general, we determine what is the overhead in a plus and the overhead in double plus. But in ABC, we need for each activity. You see now where we have a difference between ABC and traditional costing, and you will realize those advantages we have already said. So now let's look at our setup cost. The total setup cost, it is given here, 73,200, and here it is 60,000. Okay. $60,000, and here it is 63,000, and here it is 19,800. Here 216,000. So the total of all overheads is this. This is the total of all overheads we have. This total. Okay. You know why I write it here? I need to differentiate what should go in a plus and a double plus, but I have to use BC. Okay, I'm going to apportion. Okay, what should go to plus? What should go to double plus? But the principles to use is the activity-based costing. Now, they say setup cost, it has to go with the number of setups when you are apportioning. Okay, remember I said in ABC, we need to know what you call steps. Cost per activity, and then you do allocation. That is ABC. We say cost per activity. What is our cost per activity? We said the formula, look at here, total cost of activity over total number of activities. So our cost per activity, when you see it, let's start on setup cost. Okay, let's go to setup cost. Setup cost. Okay, this is setup cost. Cost per activity, when you look at it, you are going to determine what is the cost of this setup cost. It is this 73. Then total number of activities, I know that the cost driver of this setup is number of setups. Okay. Uzango, setup cost inaweza kuja na number of setups. So what is the number of setups do we have? The number of setups we have. We're going to determine to see them if we have it. So you know we have a product which is called the plus and double plus. Here it is not a department. Our cost center is a product, not a department. It is plus and double plus. So now we're going to see, do we have a number of setups in a question? That is why I say this information will help us. Or they might give you information which will not be using it, but there is information that you will need depending on the information you will need, depending on what you are working on. So you see here they say number of look at here. Number of setups per batch. We have 1 and 3. We should not use this 1 and 3. No. This is number of setups per batch. Okay? And the examiner say to have to choose number of setups. You know what it means? Hano hashobora kuba umutego, okay, ku munyeshuri runaka ugasanga akoresha number of setups per batch. And remember what they say? They say number of setups. That's what you have to use. You have to use number of setups, not number of setups per batch. But the information you have is giving you number of setups per batch. You come and ask yourself, how do they have get this number of setups per batch? You see, we have a number of setups per batch. We have a number of setups per batch. What does it mean? It is on plus we have 1, and on double plus, let's say here we have 3. This is plus, and this is double plus. Okay, so we have 1, and here we have 3, and we need number of setups. How do they have get it? Remember, if you remember what I said here, I said that you need to interpret the information. They say, if I say here it was this was the money, this was the hours. So this was the money per hour, which means something you divide by another one, it will be that money over that thing. So it is in per. Which means here, if it is number of setups per batch, what they have done, it means they take, okay, for computation, they take number of setups, okay, then they divide by number of batch. Okay, I want us to understand this. Let me go like this. They take the number of setups, then divide by the number of batch. They get number of setups per batch. That is 1. And we need to ask ourselves, can we get the number of batch? Because we need the number of setups. Can we get the number of batch? No, it's simple. Do you have a number of batch? You see here we have a number of batches, which is 12, and here we have 24. So we have 12. It's like here we have 12. Okay, we have x. We are looking for x. What we don't have over 12. It is number of batch. Okay, equal to 1. Ugatibaza ni iki bagabanyije nacyo na kabiri bakabona rimwe. Bivuze ngo ni cross multiplication. 1 times this 12, it is 12 here. If you take 12 over 12, it gives you 1, which means our number of setup is 12. Okay, the number of setup is 12. You get it? So it means the number of setup is 12. So ubwo hano tumaze kubona logic ufata the number of setup per batch, then you multiply by the number of batches, we get the number of setups. Okay, we take this one, multiply by the number of batches, we get the number of setup. Okay, this one times 12, we get 12, we get our number of setups. Okay, in double plus, we can say this is 12 plus. With double plus, it is 24, and you have a number of setup per batch, which is 3. We're going to 3 times 24. Okay, you get the logic. It's like here we have 3, and here we have 24. And I'm asking what is the number of setups? It means it is 3 times 24, okay? Which means 3 times 24, it should give you something. If you divide by 24, it gives you 3, okay? So if 3 times 24, it is equal to 72. 72 divided by 24, it is 3. So we put here 72, our number of setups. You see how easy ABC is. It is easy. It's only required to understand. Okay. So if we take 12 plus, so it is 12 plus 72, it becomes 84 with the total cost here. Okay. So we can determine now. This is okay. Let me say this. Is this over 84? 87.1. I get my answer here. 87.1. You see? So once you get 87.1, this is what you should go. This is cost per activity. Okay, this is step 1, cost per activity. You go to allocation. Let's do allocation like this. Ko twakoze allocation hano kare, iyo tugiye gukora n'ubundi. So I will come and put here. This is for plus, and this is for double plus. Okay, for plus, it means I get this times 12. That is for plus. Plus is 12. Then I get 871 times this 72. Okay, so I can determine it by saying this times 12. That is what goes in plus. Then double plus, it will be this times 72. This 72 here, 72 here, 72. I get it. When you sum them, it should bring 73,200. You see, she's giving you 73,200. This is for double plus. Okay, this is for double plus. So now our answer here, it is, look at this, and also it will be this. I hope you see how I got these numbers. If you sum it, it comes to this 73,200. You see, it is giving me this 73,200. Now I apportion it. I go to the second one. The same story. That's what I'm going to do. The same what I have done. Other material handling, order handling, other overheads. Then I get my marks. You see. Now let's go to special parts handling. All right, handling now. Wrongly. Special parts handling. We go to the second activities. Okay. Second activity is special parts handling. This is no setups. This is special parts handling. Special parts handling, we're going to see, it means how are we going to get special parts handling? Cost per activity, then we do allocation. It's what we are determining. Cost per activity, then we do this allocation. The cost per activity for special parts handling, you see, special parts handling, the cost of it is 60. Okay, it is total cost. So there are cost driver on activities, number of activities you have to use for it. It is number of special parts. Okay, say number of special parts. Special parts. Now let's look at our question. Do you have a number of special parts? Okay, the total cost here, it is this figure 60. I'm going to divide it by those cost drivers I'm using. Okay, for plus and double plus. Then let's go to see if we have a number of special parts. That's information we're going to look in the question. Do you have a number of special parts? Here I have. They say special parts per unit. This means this is special parts per one unit. This is 1 and 4. Special parts per what? Per unit. Which means that to get number of special parts for the whole unit, we multiply by this number of units. Okay. 1 times 24, 4 times 24,000. So I get it for the whole unit. Okay. So this is special parts per unit. 1 times 24,000, 4 times 24,000. So I can get the total number of special parts. So which means 1 times 24,000, it is what? It's going to be 24. Okay, it's going to be 24. Okay. Then plus. What should go in double plus? We beat this 4. The same story. They take special parts over unit, over number of units. So we have special parts per unit. That's what it goes. That's what it gives us special parts per unit. So I take this one times the number of units. I go to the special parts. All right. So this will be 4 times 24,000. So if we take 4 times 24,000 in your calculator, we'll be having 96,000. This is 96,000. Okay. Now we can determine the total of 2. It will be 24,000. If I add 96, it is 120. So it will be now this 60 over 120. So it gives me 0.5. I'm going to do allocation. This is cost per activity. Okay, cost per activity. This means this is money. This is money over or money per special parts. Money per special parts. So now to know the one for each, for to go in plus and double plus, I will.
Hello, Ashimi. How do
Hello,
you use the special part per unit?
Sorry?
How do we use a special part per unit?
How do we use it? No, I'm not using the special parts per unit. They say we have the information is giving us special parts per unit, but they said we have to use the number of special parts. And remember, this overhead cost is for the whole units they produce. So for the whole units they produce, it means that what I should do, I should take this number of social parts, because it's per one unit, I multiply by the whole units, I get the number of social parts. And even here, I get for the whole number of social parts. Then I divide the determine cost per activity. Then after I will divide it for the whole units to determine per one unit. Okay. Have I explained it? All right.
Yes, thank you.
Welcome. Okay. I can use also another logic for you. You know, we have number of special parts per unit. It means how do they have get it? It is number of special parts divided by number of units. So it's number of special parts per unit. So you get that number of special parts per unit times the units. So you get all the number of special parts, which is this. Then you get what the examiner tell us to use. The number of special parts, not the per unit. The number of special parts. Okay. That's why examiner all the time they guide you. But the way we apply, that's what causes us a problem. Okay. Now here I'm going to have the one for plus, and here double plus. Here it is double plus. What it was in double plus. So here it will be 0.5 times 24,000. That is in the plus. I hope you are seeing the way I am doing the logic I'm using. It is this times this 24. This 0.5 times this 96. That is ABC. That is how it works. If you want to understand it, it is this times 96,000. Okay. Add them two, it gives you 60 again. So we come and put here, we get 20 and 40, 12 and 48. Here it is 12,000, and here it is 48. Okay. Then I go to other material handling. Other material handling. So here, other material handling, cost driver. The cost driver of it, you see, we have other material handling. We have to choose a number of batches. Number of batches. Okay. Number of batches. Okay. Number of batches. This is where we are now. So we need to tell the cost per activity, we do allocation. Cost per activity is total cost over this number of batches. The total cost of other material handling, it is this 63. Okay. Then number of batches, we have to look for plus and double plus. Do you have it? We have to check in our information you have. They say number of batches, we have 12 and 24. This is number of batches, 12 and 24. That it's automatic. Number of batches is 12 plus 24. Okay. Remember, what I can say is this. Examiner is allowed to change you in whatever perspective. Like, wasabwa kuanza kubishaka. Nanga wasabwa kuanza kubishaka. Number of setups. Because they give you information that will allow you to do so. So not all the time you'll be given like the final figure. No. Sometimes you need to compute it because you have those information to compute. Okay, so examiner is right in whatever way, as long as he has provided the necessary information for you to determine what you will need. Okay. Never think in the way that everything will be given to you. No. Something you need to find it on yourself depending on the information you have. So this is 36. So it means I'm going to take this over 36. So this is cost per activity. Then I can determine the allocation. I'm going to allocate it to plus and double plus. Remember, this is a plus and this is double plus. So I'm going to take this times 12, sorry. And here it will be this times 24. I get 42. 21 and 24. 21 and 24. Yes.
Hello. Yeah.
Yes, I can hear you.
I would like you to tell me like what gave you the hint on setup cost, because I might think they're giving us the setups.
All right. Okay, let me come back on that. Look, the examiner said setup cost you have to use number of setups. Okay, the question, the way it says that setup cost, you have to use number of setups. And what you have, the information you have, it is number of setups per batch. Do you think you should use number of setups per batch? It is different from number of setups. That's the reason why. Well, this is what it tells me that here it is not what directly they told me to use. Okay, that's first information. They told you you have to use number of setups, and you are using number of setups per batch. That is wrong. But you ask yourself, can I get the number of setups? If I have a number of setups per batch, can I get the number of setups? And I come and tell you that if you want to understand something, okay, that is really what will help you all the time. Whenever you have challenges in terms of understanding, oh, I have this, but I don't know what should happen next. This is number of setups per batch. We're going to analyze it one by one. What does number of setups per batch mean to me? Ntanibaza babishatse gute? Bishatse gusobanura iki kuri njyewe? Bivuze ngo ni number of setups per batch bafashe, ntanibaza ukuntu byagiye kugira bayibone, bafashe number of setups bagabanya number of batch. That is what I said. This paper sometimes require you the critical thinking, okay? And we learn it slowly, but we know. Then what you do, we've got a number of setups, a number of batches. So to want a number of setups per batch. Remember, if we say Icpar day, one like this, that's Icpar day. So it's like number of setups per batch. They divide something. So it is number of setups per batch. They divided something. It is number of setups divided by number of batches. So that's what they gave us, number of setups per batch. And I asked myself, if I have this, the number of batches I have them in a question, can I determine this number of setups the examiner told me to use here? That's what he told me, that I have to go and find it. You get it? Hello, you get it? All right.
Yes, sir. Yes.
All right, let's continue. This is 21 and 42. Was it what? Okay, 21 and 42. If you add it, it's 63. Let's go to order handling. Order handling. It is order handling. Other material handling is finished. There is other material handling. So we go to order handling. Order handling, we have
Excuse me, sir.
Yes, please. Now you put the question in the comment section box, because we not finish. If we go like that, we not finish. I know we not finish. Let me first go and finish. Just you can type the question in the comment section box. I will answer. After I will answer, we will go on everything. Then I will answer before we leave the question. Okay. Excuse me for that. Because if we go like that, we will finish on this only. We will not be moving. Okay. The question is comment section box. I will answer. Okay. I will come back on it. Whenever I have a question, write it somewhere else. Then after I finish, you ask. I think that approach will help us. Okay. Yeah. Let me continue. Order handling. They say you have to use a number of orders. Do you have a number of orders? If you look at the information, you see we have a number of orders here, 10 and 14. Okay. I go to number of orders. No of orders. So the cost per activity, it will be the total cost, which is this 19,800. Then remember our number of orders for plus, it is this 10 and this 14. 10 and 14. So I come here, 10 plus 14. Okay, here I'm dividing. So we'll be having this is 24. So I think I don't need this. Here I can put this over 24. So I get this figure. Let me do like this. Now, here, we need the one for plus and double plus. I said it will be this 825 times 10. That is for plus. Then for double plus, it will be this one times 14. I'll be having this figure, 8250. 8250. And here, you see, I'm having 11. 11,550. If I add it, it becomes still 19,800. Other overheads, other overheads, other overheads. Look at the question. Other overheads, when you look at the question, they say other overheads, we don't have a cost driver of it. You see? But they have we have additional information here. They say other overheads do not have an identifiable cost driver. And in ABC system, this overhead would be recovered on a direct labor hour basis. So it means we want to use direct labor hours to be able to apportion our other overheads. Have to use direct labor hours to apportion other overheads as is given in the question. Do we have direct labor hours? That's what you ask yourself. They say, you see, we have direct labor hour per unit. This is direct labor hour per unit. That is 1 and 1.5. It is per unit. And remember, this overhead, it is annual. It is for the whole production. It is for whole of what we produce in general. So that's why if I have per unit, I need to ask myself direct labor hour only. What I need, not per unit. So I will take 1 times the whole unit, 24. 1.5 times the whole unit, 24,000 as well. This logic, I think, logic na basi wanyu to shock you core. So I will take the total cost per activity. The total cost is this 216,000. Then I will divide it by, if you remember, let me first find the direct labor hours here. Direct labor hours it is equal to, okay, this is for plus, and I need double plus. Double plus, I will take 1. If you remember, they say 1, it is for 1 unit. Then I multiply by the whole unit, they say per unit. That's what gives me guarantee that I have to multiply by this 24,000 to determine for the direct labor hours for the whole production. So I can take 1 times 24. I have it. Also here I will take 1.5, as you see, times 24,000. So the answer this is the answer we have here. This is the solution. Okay. So 24,036. What I get, it is direct labor hours. And they say here I have to use direct labor hours. Direct labor. How to direct labor hours. In the direct labor hours, you get it. So we see it is 24,000 plus 36,000.
For plus, sorry, sir.
Yes.
I think for plus is 12 units.
It's not 12, it is 1 and 24,000.
Sorry.
Or is it 24? Yeah.
Sorry.
All right. Okay. So with the summation of it is 60. So it will take this over. When I sum this, it is 60,000. So I get 3.6 per watt. So this is not for 3.6 per hour. So I can now determine allocation of it. And I said allocation is a simple thing. For plus, we'll be taking this 36,000 times 24. 24, this 24. And also here it will be 3.6, then multiplied by 36,000. Okay, this is the answer I'll be getting. So this is 86 and this is 129,600. If you add it together, it also gives you still 216. Okay, 86, 400, 86, 400, and here it is 36,000. So the summation of total of this overhead is this 138, and here these are the summations. So now I don't need this. This was my total cost. I don't need it here. I can put it here, but my answer is this only. This one I put it here for studying, but because we are learning. But this one I don't need it because it is given. What I need is this. I know if I sum this, to give me this. But I don't need even to confirm it because I know how these things work. You don't need to waste time there and do something wrong. Other overheads, this is wrong. This one is 36. It will be 129,600. This is wrong. It is 129,600. This is what I computed. I computed this 86,400 and 129,600. Okay, this is what I computed. If I add it, it is 112,610. Yeah. Then this is total overheads. Total overheads. All right. You see this direct cost and total overheads we have now, so we can determine total cost. Total production cost, which is equal to this 288,000 plus 138,107. So it gives us this. So this is the same story here. So I can determine all the units produced. Okay, units produced, because we need per 1 unit, cost per unit, units produced or annual production.
Sorry, sir.
Yes.
We don't have direct labor.
Have them. Okay, wait, let me finish. Then you ask me. We have the direct labor, we have it. So this is unit produced. After we get this unit produced, I determine unit cost. Unit cost or cost. Okay, let me say cost per unit. Cost per unit. This is cost per unit. So we can determine our cost per unit, which will be this over this 18, and here it is 36, but it is like this. Let's put these two decimals. Okay, this is 17 and 36.2. So now this is cost per unit as per ABC. That is the first answer. Okay, question before I go to overhead absorption costing. Or let me first teach overhead absorption costing, then we go together on the same questions. We ask the questions, then I will answer, please. No, I will answer all of it. But for us to do overhead absorption costing, this is ABC. Okay, this one here, it was on ABC. Okay, let's use overhead absorption costing. It's simple. Let me do like this. And do here traditional costing, overhead. Okay, using absorption costing, traditional absorption costing. Okay, this is traditional absorption costing I'm going to use. So what's relevant there, it is still batwe gushaka cost per unit, sibyo? Bivuze ngo still ndi gukorera ngo bahita nkora cost statement nk'ibisanzwe niyo ukora. So ndatangira kuri direct cost zanjye, muzi ko mbifite direct cost ndazifite, muzibuka twazishatse hano ngizi, twazari ebyiri, nta kiri buhindukeho kuri zo. Ndi bwandike direct cost ni direct cost, ahubwo overhead nto bitandukanira, sibyo? Twavuga ko izi zose tuzikoresha mu counting overheads. The overheads is this. This is our overheads. So now our overheads in absorption costing, twavuze ko tuza dushaka overhead absorption rate. Yes, this is working here. Overhead absorption rate. So overhead absorption rate, it is going to base on direct labor hour basis. Okay, because they tell us in that in exam. If they are silent, they don't give you a basis of apportionment when you're in traditional costing. You have to use the net labor hours. Unless the examiner says you have to use machine hours, you have to use any basis they can give you, you can use it. But it is generally assumed that you use direct labor hours. So overhead absorption rate, it is equal to the total overheads. It is not the total cost of activity, no, the total overhead. Remember our total overhead, look at this. This is our total overheads. This is 432. It is this. These total overheads here is this one. This is 432. That's what we're going to use. 432. All right, that is 432. Then we are going to divide it by the basis of apportionment, which is direct labor hours. We have to use direct labor hours. DRH, I want to mean direct labor hours. So direct labor hours in the plus and double plus, we know them. This is here. Remember here, there's something we computed now. We said here, it is here. They said we said direct labor hours for plus, it is this. Okay, let me put it again, the figures we computed. It was this. And here it was this, 24 and 36. That was our 24 is for plus, direct labor hours, and the labor hours for that plus is 36. So I have to choose 24 and 36, okay? Only. So I have to choose 24,000 plus 36,000. So this gives me what? It gives me 60,000. So let me. So what I'm doing is going to take this over 60,000. 60,000 is a summation of this. So it gives me 7, but not actually 77.2. 7.2. Let me use 2 decimals to be consistent. So now I'm going to do allocation of this overhead. Okay, overhead absorption rate is this. It means per hour. So I'm going to apportion it. 2 plus and double plus. So to do allocation, I'm going to do allocation. Let me do allocation. Allocation here for plus. This is plus. This is D plus. So for plus, I will take 7.2 times 24. Now, for the allocation the same way we have done others. Even here for double plus, we will take the 7.2, then multiply by 36,000. Simple. Okay. So the total is 432. Still the total overhead is hard. Okay. That is how we apportion it. So my overhead is now, you see, this is it. And here, this is my overhead. So if you add it, it still comes 432,000. So total production cost, it will be equal to the summation of these two. Total production cost. This is my total production cost. So can I the unit produced? You remember of units produced? So it is 224,000. Could they ask us per unit? So cost per unit will be equal to this over the whole number of units produced. So it is 19, and this one is 35. So now how can we comment? Remember, after computation, we need to comment, but it is not required here, but we are learning, so we need to comment. What does this tell us? Okay, the moment, then to get some questions I can answer. So comment. What can we say? You see, when you use traditional absorption costing, the cost is 19.2 for plus and double plus is 34.8. And when you use ABC, you analyze each cost separately basing on what causes it to happen. So what causes more, okay, let's say the activity with more consumption, we can highlight it. You know, this what causes this cost to be, let's say, 62. You see, the highest cost you have is these or other overheads. Okay, when you look at other overheads ahantu twayikoreye urabona ko other overheads kuri plus if it is 36,000 labor hours, ukatumenya ko impamvu iri gutuma iba total cost iri hejuru cyane. Impamvu yagize 129, iyi ngiyi impamvu yagize 62, ushobora kumenya impamvu yabiteye. Yego, everything we can know what the causes of it. So now it means, as we have said, the ABC system or activity-based costing system is providing the realistic cost, the realistic information, which gives us more insight on what drives cost to incur. Now, the cost per unit, it is 17.75, but here it was 19.2. What does it mean? It means that traditional absorption costing is overstating the cost of a product on a plus, and on double plus, you see we have 36. Here it is 34. On double plus, traditional absorption costing is understating the cost of a product. That is on the side of double plus. That's what will be your comment here. Okay. Traditional costing is overstating and understating, but ABC is giving the real data. Now I can hear the questions. What are the questions? Any question? Yeah, go ahead. There is somebody who asked me first question. Say, repeat again on special parts handling, on how you find the number of special parts. Yeah, let me go to this, JB. So here, you said on special parts. Let me see. It was special parts. Special parts here. On special parts, special parts handling, the cost of it, they said in the question, special parts handling, we have to choose the number of special parts. And then how I get special parts, or how I get the number of special parts. Look at the question. They give me number of special parts. Sorry, they may give me special parts per unit. They give me special parts per unit, which is 1 and 4. It is per unit. And remember, I said, you have special parts per unit. You ask yourself, how do they have got these special parts per unit? Because the examiner told me to use number of special parts. Okay? Examiner guided me and said, use number of special parts. Never waste the time on say this is a cost driver, this is appropriate. No, they give you cost driver. Then, which means you should use number of special parts, not number of special parts. Let's say if it is per batch or it is for per whatever. So you have to use number of special parts. And you see we have special parts per unit. And I ask myself, to get number of special parts per unit, it means they have taken number of special parts, then they divide by the number of units. Then they get special parts per unit. So you have number of special parts. Okay, look at here. Let me go like this. Let's have it here. I hope you can see my screen. Who was having 1 number of special parts per unit. Okay. This was number of special parts per unit. That's what they gave us per unit. They gave us number of special parts per unit. It was 1. And I asked myself, how do they have got this 1? It means they take number of special parts. They take number of special parts divided by the number of units. Not of units. Number of units. That's how they get this number of special parts per unit. And I know this number of units. This number of units, I know them. Okay, it's like this number of units, I know it is 24,000. And the number of special parts, I don't know, it is X. I'm looking for. It is X. Something unknown. We don't know it. Okay. If we don't know this X and they have this 1, how can I get this X? Cross multiplication. 1 times 24. You get this here. So it gives you 24. So if you take 24,000 over 24,000, you get 1. That's why I say number of special parts now it is 24,000. Okay, I go here on number of special parts here. I get 24,000. And even on second, on double plus, kuko namaze kumenya umuvuno ko ndi bufate number of special parts bantinga kuba number of units netambona number of special parts. Now ukide spending a time for nothing. Umaze kumva ukuntu ikintu gikore. Don't waste time. Keep doing that logic. Okay? So netamba tugo number of special parts bantinga by hano hejuru, which is 4, then itamuba 24. Itabimereza 96. Ari tukabonyanga 96. Then nitambona cost per activity, then I allocate. Kimwe nuko umuntu atukoma bamara allocate gateganya number of units, it's okay. Ariko kugira ngo du saving our time, nahise mbanza gushaka the total yose hano ukwiri 12 and 48. Maze kuzibona nzikiramo hano at the end ndazitanye zose ngabanyaho the number of units produced, mbona per unit, the cost per unit. Okay, that's how we get also the number of special parts. Another question, do we still need to interpret even when the question didn't ask us to do so? No. If the question didn't ask you to interpret, it's okay. You should not interpret. Okay, you don't interpret. If the question does not ask you to interpret, you don't interpret. But it depends on how the question is asking. Imagine if the question is requiring you to evaluate. It means after your computation, okay, you need to comment on what you have done as an evaluation. If they say assess, You have to note these verbs the examiners using. Okay, you see in the past papers, if they say evaluate, assess, critically analyze, my friend, it means they need interpretation. If they require to compute, at the end of the day, you should determine the comment, or you should interpret what the result you have got. All right, that is it. Thank you. Let's go to another question. And the other question we have is from past paper. Okay, at least here, I hope you have understood how ABC and traditional costing works. Everybody can work on, if it is the question on past paper, you can work on it. Now let's see if we have understood. Let's apply to the question. Okay, let's apply to the question. Okay, let me bring back the PowerPoint presentation. This is the question we're going to look. Okay, this was the example we was having. Then the question is this, question 1 of August 2025, question 1, part A. The requirement was on ABC. I don't know if we can look, you see the requirement is here. Look, the requirement, they say required. This is question 1. Requirement, for each product of Organza Tech Limited, compute the cost per unit using conventional product costing and activity-based costing system. 14 marks. They say to compute. You don't need to interpret. You need only to compute. Then, requirement number 2, they say advise how adoption of benchmarking will be of benefit to Organza Tech Limited. This one, of course, we cannot answer right now because I have not covered it, but I can help. Then on part C, they say for smartphone production units of Organza Tech, the total material mix variance. This will also cover in once we cover the variance. I don't want to jump, but if you recommend to me to do so, I can jump and go through that. Then for each dimension, and I can cover this costing approach. Then I go to variance. Then after I finish the question, I go to other topics. But it's okay. Let's go as the note is. We shall come back and determine these variances or the whole question of this we will cover. Then they say for each dimension of a building block model, calculate each one performance indicator for balance for BSC. This is a company, and one for the SCW average using the data available. Briefly discuss BSC performance relative to other SCW service center. And they say support the statement made by the panelists emphasizing on key principles of VBM. VBM is about value-based management in performance management and measurement perspectives. So our concern now is this 14 marks. Okay, it is this 14 marks. We're going to work on this 14 marks. They say, okay, let me come back on why I come to read the requirement first. When you are in exam, to approach a question, you need first to read the requirement. They say for each product of Organza Tech. So it means once we be reading the question, when we want to answer the question 1, this part A, we have to look at Organza Tech information. You see, it is Organza Tech information. You see, we have also the company called the BSC. We have also OCCW. We are not concerned about that when you are on ABC. We will only look at Organza Tech. Then we determine cost of producing each unit using traditional costing and using ABC. Let's go to determine these 14 marks in easy way. So let's go to the question. The question is saying, Bufundu Investment Group is a conglomerate that has been operating in Rwanda. For over two decades. It is governed by active board of directors and aim to establish and manage companies across various sectors, including tech manufacturing, health, agriculture, and mining. Currently, the group owns 2 companies at the group level. There are some employees in different functions who are responsible for the effective management of group's companies. Currently, Bufundu Investment Group only runs the Organza Tech Limited, which specializes in technology related to manufacturing and one-stop care wellness company, OCCW Co., which offers health-related service. Expansion into the other sector is planned for the near future. Organza Tech Limited is a fast-growing Rwandan technology manufacturing company specializing in the production of smart devices, including smartphones, smart home gadgets, and IoT solution for agriculture. Established in 2005, the company has rapidly expanded its operations across East Africa, competing with both local and international firms. Over the past decades, Buganza Tech Limited has developed and marketed three main types of IoT equipment, capturing the hearts of consumers and securing over 42% of the market share in Rwanda. The region and beyond, however, the recent entry of numerous tech companies into the market has led to a significant decline in the company's market share. Okay, company market share. Cost and overheads allocation system. In response, they are saying, in response to these competitive pressures, okay, in response to these competitive pressures, the company's management has made substantial investment in advanced manufacturing technologies. As a result, Buganza Tech Limited has shifted from labor-intensive to capital-intensive production method, leading to a considerable reduction in its workforce. To remain competitive and responsive to the evolving tastes and preferences of the customers, the company has also strengthened its research and development department, positioning itself for innovation and long-term sustainability. Historically, the company has allocated all production overhead costs using total machine hours basis. It is now 3 months since the company hired the new senior management accountant who advocated the change from traditional method of allocating overheads and start to adopt the activity-based costing ABC. The senior accountant has produced the following cost and the production analysis. Okay. We have details and the product information. Okay, 1 minute to pick a call here. All right, I was speaking the call. Sorry for that interruption. So I'm saying details and the product. We have hours per unit, labor hours per unit, and machine hours per unit, material cost per unit, and this is production in units. Production in units, and the late labor cost hours in Rwanda and France. These are money, and these are the units, and these are the money. You see, material cost per unit in francs here, machine hour per unit. This is machine hours 3, 2, and 6, and labor hours per unit. This is 1, this is 3, and this is 2. So our cost center, it is this AX, BY, and CZ. These are our products we are producing. Okay, these are our cost centers. Now we can continue. In preparation for changing to the activity-based costing system, by the help of newly hired senior management, new hired senior management, accountant. The company has recorded the following cost drivers for the 3 products over the month's production activities or cost pools. We have these are activities, we have cost drivers, and we have products. So these things we already know. What does it mean to us? We have material handling, we have machine setup cost and inspection cost. We have a number of requisitions, number of setups, number of inspections. These are the numbers in each product, in each cost center in each product we're producing. Now, the company's production overhead are normally absorbed on machine hour basis. You see, production overhead are normally absorbed on machine hour basis. That's what I said to you. If the examiner says, if it is silent, that is when you use labor hours. But when the examiner says you have to use machine hours, that is what you should do. They say the company is using machine hour basis. So you use machine hour basis when we're absorbing, when we are in absorption costing. So the rate of absorption for the month of March 2025 was accurately calculated as 100 francs 500 per machine hour. You remember what I told you? They say money per machine hour. Money per machine hour. This is overhead absorption rate, OAR, overhead absorption rate. So it means it is total overhead over the total machine hours. Okay. Then further analysis shows that the total production overhead can be divided in the following categories. We have fixed cost details. We have cost related to setups, cost related to machinery, cost related to material handling, and cost related to inspection. And the total production overhead, it is 100%. Now, very tuze kwa portioning aho ya. Gusa muri absorption costing twakoresha total overhead yose. Ariko activity, each activity, it has the cost in percentages. We have 20% of the total overhead, 40% of the total overhead, 15% of the total overhead, 25% of the total overhead, you see? Then we go to benchmarking exercise. In benchmarking exercise, they say, in response to the increasing competitive pressures facing the company, a joint meeting of the group and the company board was convened last week. One of the key agenda items was to discuss strategies, or to discuss strategic measures to ensure the company maintains its market leadership despite the growing and intense competition. Currently, the company lacks a clear understanding of its standing at the national, regional, and international levels, making it difficult to conduct meaningful comparisons and internal evaluations. So this is about benchmarking. If we're doing benchmarking, it's about we are comparing ourselves against others in the industry. Maybe you can call them the best. So we compare our performance against their performance, and we can learn from them. So they say, furthermore, the company has struggled to implement certain changes that could have enhanced its efficiency and effectiveness. Recently, the CEO attended a leadership seminar held in Musanze, where several topics, particularly benchmarking, was explored in depth. Following the seminar, she also visited an exhibition where she observed that some of the company's operations are carried out at relatively higher cost compared to competitors. This inefficiency was largely due to lack of cross-functional learning and teamwork. Motivated by the insight gained, the CEO is now committed to adopting and applying the lessons learned from the seminar to drive positive changes across the organization. Budget and budgetary control in smartphones. Buganza Tech Limited also makes environmentally friendly smartphone through smartphones production units using 4 basic ingredients, namely material 1, material 2, and material 3, and material 4. The standard cost card for one smartphone for the month of March, as started from the company's management account, was as follows. So these are materials. Then they said the production and the sales in the month of March was 120 smartphones, while the actual production and sales were 136 smartphones. The actual ingredients used for material 1 is this figure. This will help us in the variance analysis. Okay. So the following cost data will also extracted from Buganza Tech Limited units, which produces single model smartphone gadget in its one overseas factory branch for control purpose. A standard costing system were recently introduced. The standard set and the actual result for the month of May, as decided from the most recent management account, will as follows: production weighted sales, selling price per unit, materials, labor, and selling price per unit, and these are fixed overhead. And then, wait. Now, I'm not leading the question well. Okay, now I can lead. So they said the management of SCW currently focuses heavily on meeting annual budget and controlling costs, but there is a little. I think we are here. Note that Uganda Tech uses marginal costing system. That is when you are producing variances. Okay, we have to note this. Then the one-stop care wellness offers a range of service for health. So these stories, as you see, it is not, of course, what we have covered, but it's also what we have covered. These are the financial performance of the company. These are the financial metrics in addition to other service centers. Benchmarking on it. Then these are the stories on VBM, if community value added. Then isn't requirements. But remember, we are only concerned with the part A. We're going to work on part A. This is 14 marks. Okay. Let me put in Excel, then you go back. Okay, let me project Excel file. I hope the Excel has come. This is now, we're going to work on question 1, part A only. Okay, so twashaka gusoma turi gusoma biriya byose nuko twumve ko nta yindi story tuze gukenera turi gusubizamo hariya. Okay, this is question 1A 2025 August. Okay, to answer this, we need to know our steps to go on. It is cost per activity. We need the cost per activity. Okay, they say use ABC system and costing. We need cost per activity, and also to do allocation. That is steps nakubwiye ugomba guhora mu guhoza mu mutwe ukavuga uti when it comes to ABC it is simple. What should come to my mind is cost per activity and allocation. That's what we are going to use. Then we go to allocation costing as well. So now, give me 1 minute. 1 minute again to pick the call. This person keep calling me. 1 minute. Okay, I'm saying I come back. I finished what I was doing. So, cost per activity in our question, remember to have the cost centers actually X, BY, and CZ. Are you there? I hope there is no question. Yes, it's August question 1, 2025. Yeah, question 1, part A. Now, cost per activity tugiye gushaka zacu twavuze ko tuzigenza gute uko tuzishaka mubyibuka twavuze ngo turabanza turebe total cost, okay, cost per activity, tufata cost of activity, cost of an activity. So remember where to look at. So they say, okay, let me reduce it like this. Okay, this is it. We have the cost, the activities that nizo tumakoza ku identifying. Dufite setup, cost setting to setup, cost setting to machinery, cost setting to material, cost setting to inspection. Okay, that is niho ruzingiye kuko at the end bivuye muri requirement, excuse me, bivuye muri requirement bambwiye kuza guproducing a cost per unit of a product. Okay, we can start like this. Before I go to ABC, let me go to ushake cost per unit. Hano tuza kwashyira product zacu. Let me increase the size. Okay, hano izi step ebyiri mu byibuka. So dufite product eshatu, dufite AX, AY, and another one it is CZ, sorry, BY. This is BY and CZ. And there is numbers there. So now, hano ndahashyira items ndiho ndi describing. These are my products. Sorry. Okay. Now, here, what we are doing, tugiye kureba, tugiye gukora cost per unit. Cost per unit of a product. So for us to determine cost per unit of a product, remember we need to determine what is direct material, direct labor, direct expense. We go to overheads later. Okay, there is the first easiest max. Tugomba kubona nyine tugasigara tugiye gukora bino twavuze byo kujya kwa portioninga nyuma. So hano kuri iki kibazo cyacu batwe ngo labor hour per unit. This is not money. Machine hours per unit. It's okay. This is an information. They say material cost per unit 800. You see, we have 800 and we have 480 and 1,000. It is per unit. Material cost, it means it is our direct material cost. Our direct material cost. So we can determine our direct material cost as well. Let's put here material cost. Material cost. It is direct material. It is material, direct material. Direct material. It is direct material. So it is 800, 480, and 1,000. Multiplied by the unit they produce. How many units they produce? That's what we need to know. Okay, we know it. So let's see the units they produced. Can you know the units they produce? Let's look at it. The units they produced. In our question, do you have units produced? These are production units. Material cost per unit give these are production units 30, 50, and 280. It is there together. So I think ninandika magana nane ndatankuba ibihumbi mirongo itatu mbone the whole unit. So the whole material cost magana mirongo inani times 50 igihumbi times magana mirongo inani. These are production units. Okay, so we can say ubwo ndi kubikora rimwe kuko ntabwo ukeneye gukwestinga atari muri exame. So it is magana inani times 30,000. Get this? Okay. This is a material cost. Now, corner for BY, I'm going to take 480 times 50. 480 times 50,000. These are units they produce. At the end, that's what one unit to product. At the end, that's what one unit is produce in the unit produced. Then I think on cost per unit. So the fata igihumbi mu magana mirongo inani times 280. Okay, I hope this is clear. So now this is our material cost. Tumaze kuyibona. Noneho tugiye kureba dufite labor cost. Dufite labor hours. Direct labor cost per hour. You see, it is per hour. They pay depending on hours and how many hours goes in unit. The hours goes in unit is 1. We need to know the total labor hours. Okay, So if I take 250 times the 1, I get for the 1 hour for 1 unit, cost per 1 unit, then multiply by the whole number of units we produce. You see, reka tube twandike ngo manze hano mutima wakora kawaking ariko ngo direct we may need it, direct labor hours. Contribute zibone, that is for AX, this is for BY, this is for CZ. Sorry, CZ. So for AY, you know, they say hour per unit, they say labor hours per unit, it is 1, 3, and 2. It is this 1, 3, and 2. And how many units? If you remember, this 1, 3, and 2, unit is 30, 50, and 280. Why am I saying that? Because it is labor hour per unit. Ku isaha imwe, sorry, kuri unit imwe, amasaha bakoresha bari kuyiproducinga. 1 unit, how many hours, how many labor hours you spend. Okay, so we put that way, we put our units 30,000, and it is 30, 50, and 280. 30, 50, 280. These are our production units. So these are units. These are hours. These are departments. Okay. Oh, sorry, these are products. So we can determine total hours. This is our total hours. Okay. Total hours for production. Sorry, I'm sorry. Hours for production. So we're going to gushaka labor cost. Labor cost. Ndi kwandika hano. Please look at the here. Look at here. Labor cost. I'm right. Labor cost. So batubwiye ko dufite machine, sorry, dufite cost per hour. Not, it is not cost per unit. It is the rate cost per hour. So it is 250 times the whole unit. Okay. The whole hours, which is 30, 150, and 560. So the labor cost per hour, it is 250, 250 everywhere. It is 250. Okay. So I can determine it here. Labor cost, because this is rate, labor rate or cost per hour. We can call it labor cost per hour. This is labor cost per hour. Then it is 250. They pay in 1 hour. So what is our total labor cost? We spend this money to them. So this is it. I hope this is clear and understandable. Okay. So I can come and put it here now. 750, 37, and here I'll be having 140. Okay. Now I go to, do you have direct expense? You check in the question. You check in the question. If you because you should not say, oh, all the time is not there. No. You have to check. You have the direct labor cost and the material cost per unit. So what you have already we have covered. So we can determine now this is our total direct cost. Direct cost. So our direct cost is this. The total is this. So we go to overheads. Kurikire overhead yacu mu by'ukuri ko turi tulistinga ama activities dufite n'ama cost yayo ari respective in total. Sibyo? Urebye iki kibazo rero baduhaye amakoste dufite yose ngayo baduhaye ngo the cost details. These physical cost details. The cost relating to setup, machinery, material handling, inspection, and that is it. Total yose operation overhead. So ndegwanika setup, yandika setup ngo ni cost relating to setup. Sibyo? Setups, machinery, material handling, and inspection. Dutangiye tuzi ibyo turi gukora ni ibiki. Setups. That's what I should be writing. What is the second? The second is machinery. Okay. Cost relating to machinery. That's the cost relating to machinery. Okay. Then cost relating to The third is material handling. Material handling. And then we look at the inspection. So there is what the cost setting to set up cost setting to ibyo ngibyo nibyo nanjye ko there is no value it is adding to me, but I know it is a cost. Yamfashije kumva icyo bashaka kumbwira. Now what I'm going to do, I'm going to determine, okay, their cost. Then I can, because I know how to apportion it, but their cost in general, what is it? Their cost in general ndazishaka mbe nzifite hano, noneho arizo ngenda naportioninga gutya, naportioninga yego nicyo turi gukora ABC mo hano. So now when you look at our question, batubwiye, do you have production overhead? Let's see if you have a production overhead. You see here we don't have any production overhead. Mwabibonye ntabwo dufite production overhead yose ngo tukuyeho hano mu percentage, ntayo dufite production overhead tugiye kujya kuyishaka. Bikumvikana? Mwabyumvishije hano harimo umutego. Yego umutego ahantu uri cyangwa se okay niho hari ubwenge. Ubwenge ahantu buri ni ukujya gushaka cost of production. So total production overhead. Total production overhead. Total production overhead nitumara kuyibona tubasha gushyira muri percentages. Numara kwibona uretse wapuringa ABC principles zawe. So nibyo yabwiye ngo muri advanced level dukeneye gutekereza byimbitse. How does it work? Reba hano ufite with the company production overhead are normally absorbed on machine hour basis. The rate of absorption for the month of March 2025 was accurately calculated as 500 per machine hour. This information is enough for us. Yadufasha kubona production overhead. How? Hari ijambo nabwiye twise OAR, overhead absorption rate. Murabyibuka? Ukuntu tuyibona ngo mubyibuka nabwiye ngo urafata total overhead niko twavuze niyo mubyibuka total overhead, then you divide by basis of apportionment baba bakoresha. Basis of apportionment yacu ni machine hour, ubwo ni total machine hours. Ubwo nicyo bakoze kugira ngo babashe kubona no OAR. No OAR bayiduhaye no mubyibuka. Muri kubibona hano kandi nababwiye icyo bisobanura overhead absorption rate, that is 500 badekanye 500 per machine hour. Yego ni wenda hano bashatse kuguidinga bihagije kugira ngo umunyeshuri bitekereza neza ahita byumva. Niyo bavuga ngo overhead absorption rate it is 500 per machine hour, simple as that. It automatically means the basis is machine hour. They don't need to say that. So it is per machine hour. Then they have divided by machine hours. Okay. Now twibaza because the product eshatu. Ubwo tugiye kureba imibare hano ko bitatu. Tone tubone tufate 300 ko bya bintu byacu dufite manga tubona overheads. You get this? Then tugishyira muri percentages hano baduhaye. So what here we should do we know machine hours? Machine hours for the whole production, okay, not for the one unit, for the whole production. Machine hours yacu kuningana yego kuntu tubikorera dufite machine hour per unit, it is 3, 2 and 6, and you have this machine hour, it is 3, 2 and 6, and you have units. This machine hour per unit kuri unit imwe imashini nava ko ikora okay kuri ni icyo dukoresha amasa 3 y'imashini kugira ngo duproducing one unit. Bikumvikana? It is 3 to 6 katubikore hano dushaka total machine hours. Total machine hours. Total machine hours. Total machine hours you have for this, it should be for these products zacu nibisanzwe. So it is hours zacu ni zihe? Ni 3 if I remember. It is 6, 3, 6 and what? It is 3, 2, 6, 3, 2, 6. It is here 3, 2 and 6. And then the units ni bisanzwe ko mpamvu duko unit this is our per unit. Yego ni mpamvu dukoresha unit. Ntabwo bivuga ngo hano tuvuga ngo is it always? No, never think in that way. I want you to think in advanced way. It depends on how they give information. So total machine hours zatazingana this 3 times this, I get 90 this is total machine hours. Okay, so this total machine hours, remember aka kantu twavugaga ahangaha, reka nze nongere nkazamure najyana hariya hirya rero tujya kugakorera, tube turi hano, sibyo? Aha twavuze ko absorption rate yacu bayishatse gutya aba bantu, sibyo? Total overhead over machine hours babona ko ari 500, sibyo? Babona ko ari 500 iyo baduhaye per machine hour. So bivuze ngo dufite 500 ko ingana, yego tuyamura akantu kugira ngo tubashe twese kubyumva ko bingana, let me say bracket 90, this is for AX product, 100 amasa 100 plus 380 yeah. This unit was it 280? Yeah, it is 280, yeah. Hari uri gukora ikibazo ukabona imibare ubonye ukabona uri abnormal, ukavuga ati why is it so high? So naho ngo uhera nyine analyze zawe. So now tugiye gushaka no tuyigaragaza noneho ya in X production overhead ntayo tuze, reka nyandikemo hano production overhead iyi nayo tuzi, niyo tugiye gushaka, mwabibonye. So aya masaha yose yateranyije urabona ko abyara toto yayo ngiyi, iteranya toto ni 1,870,000. So bivuze ngo ni cross multiplication na tano mbona in overheads, nuko ubibona. So ndafata 500 byandika aha, production overhead ingana production overhead. I hope you are seeing this. So production overhead is equal to 500. Ndaza kuba ya masaha nyine yose yateranyije aya nga 9,100 1,380 ndabiteranya. I hope you can see. So mbikuba mbona kama total production overhead ingana 995. So nuko ko dufite mu percentages buri cost yacu turayifite, dufite percentage 20, 40, 15 and 25. So katubyandika ahangaha niba ubyibuka, ngizi cost ziri hano. Ndi gushaka cost kuzishyira ahangaha kugira ngo nituma kuzikora tujye tuzitinetire ko zongeye zigahura na ya cost iri hano, sibyo? Okay, so hano bambwiye ko ari 20% ya production overhead. I don't remember well. 20, 40% and 15. 40%. Here we have 15%. And what about here? 25%. 25%. So tugiye gushaka izo production overhead zacu tuzandika ahangaha, tuzishake tuzandika. So zizaba ari 995 mu byibuka. Then dukuba that 20%. Mbonye kuri buri activities, cost ya buri activities, ngiyi cost ya buri activity ndayifite. So nkaza ngiye gukora za apportionment bambwiye, noneho ngiye ku apply ya cost per activity muri allocation. Yego, cost per activity mba mwabibonye, it is cost per activity. No hano ntago turi kwiga, hano turimo turakosora, turi kumva ibyo twize, turimo turapplyinga, sibyo? Cost per activity ndazishakira muri no column, sibyo? Nibyo ngiye gukora kamurenda scenario imwe kwa twabikoze kare, noneho tujye tubona umuvuno ariho twapplyinga kugira ngo twihute ko dukire kwihuta muri exam. So cost per activity ndahera kuri setup, kamere kuri setup cost. Setup cost cyangwa se setup mu setup ndayidara kuki setup ndaza kwenda kuri activity. Setup bambwiye ko ndibuze kugendera kuri number of setups, single number of setups. Dore ni 100 muri AX, 170 muri BY, CZ ni 700. Ndahita kuri number of setups, sibyo? No of setups. Ibi ngibi kugendeka muri exam uri guta umwanya, wandika setup gusa, wowe kuko ibyo ugiye gukora akaba ibyo wandika, sibyo? Nuko turi kwiga. Wenda bwandiye gukora kamwe akantu tugakora twihuta kuko dukeneye ko maximizing our time in exam. So ndafata 100 plus 170 plus 700. Okay, 100 plus 170 plus, is it 7? Yes, 7,000. I wanted to confirm. Muna cost per activity, sibyo? Ibi ngibi bingana ibi bingana 970, bivuze ngo ndafata aka ngabanye 970, dore iyi ni cost per activity. Cost per activity nayibonye, ngiye gukora allocation twakoze kare hano. Reka nze njyane, nubwo dufite product 3, I don't have an issue. Ngiye gukora allocation gutya, kanongera ka gatatu. What is 3 products? It is 3 products. This is AX. This is product BY, and this product it is CZ. So hano ndafata iki nkuba 100, hano ndafata ubwo cost per activity times 170, and on CZ ndafata this one, then I multiply by 700 cyangwa n'igisubizo. Okay, dore byose mbiteranyije binsubiza hahandi. Mwabibonye ko ibi byose mbiteranyije, dore toto yabyo, toto yabyo bita bigusubiza hahandi hejuru, kikwereka ko nyine ibyo gukora it is right. So now you can put these figures. So hari umunyeshuri ushaka kubaza ikibazo se, iyo turawundinze bigenda bite? Waba uri kurawundinga, waba utari kurawundinga, it's okay. Okay, it is allowed. Ushobora kurawundinga kuko hano hafite ibice n'ibice na kimwe, ugatuvuga tukarundinga ko gusa ugomba kuba consistent. Rero ukoresha ibice bibiri, komeza ukoresha ibice bibiri. Nawe warawundinze, komeza urawundinge to the full figure. Make weba consistent in your papers. Ibisubizo kutaba consistent ibyo rwose, ibyo byo nibyo bituma ushobora kuruzinga natako ba consistent. Hano rarawundinze, ugeze hano rarawundinze, that is a problem. Rarawundinze no still one the same solution like others, okay? Babiri around there. Wowe ndakubona ibijya gusa muri marking guide. Reka tujye kuri machinery ukuntu tubikoreye, batubwiye ko material that is okay. Batubwiye machine setup cost, ngiye uko tubigire machinery. We are going to look where to go with cost setting to machine. Okay, cost setting to machine utenda kuki nicyo tubwibaze. Hano ko ntayo baduhaye cost drivers for material handling. Material handling bana turayifite hano, ubwo material handling iri covered. Turebe n'indi kurikiye baduhaye, banaduhaye inspection ya number inspection nayo bayiduhaye. Machinery ntayo baduhaye. Machinery urumva wagendera hehe? Ubyo ko bavuze ngo ikintu cya machine hours mara hejuru, ubwo wagenda kuri machine hours. Okay, ina kuri number of machine hours you get. So ubwo setup cost yarangiye, tujye ku ya kabiri. Reka nyine cy'umuhondo yarangiye, ni iyi ngiyi ya kabiri, machine cost. Machinery cost setting to machinery, cost setting to machinery. Turagendera kuki? Kuri machine hours. Machine hours. Ni machine hours. So machine hours zacu ubwo iyi cost turayizi, ni cost per activity ugakora allocation, sibyo? Cost per activity ni ngakora allocation. Nzima mwabibonye ibi. Cost per activity ngakora allocation. Cost per activity ngi ndafata total cost iyi activity ni ngi itengabanya za figures dufite mahanga. Izi figures dufite hano machine hours turazizi. Nabonye kujya kwikomplicate ubuzima ngizi nazibonye total machine hours 90, 100, mwazibonye tutubwo ni yose. Niyo mpamvu navuye ngo tuno ahakurikiyeho turihuta. Iki ngiki cyo cyavuye ubwo kiri kuva iki ngiki machine hours muri A, X and kuri buri product ngiyi machine hours ngiyi mwayibonye ni 90 plus 100 plus 1680. Okay, let me avoid complicating the life. Let me say 90. Sibyo, we are learning. Let me avoid complicating life, but in exam please try to be so quick kuko amasaha ni constraint ishobora gutuma utsindwa. Ibintu ushobora kubyumva ariko amasaha akaba constraint yatuma utsindwa, sibyo? Kuko if you don't manage the time they give you have a problem. So at least within hours baguhaye ugomba kuri able yo producing answers. So it tugiye kuallocating nayo, sibyo? ikajya rotating gutya, rotating gutya ibisanzwe. Ubundi ni ya project ya mbere ibanza, ikurikira. So I take this times 90. I hope ko nta kibazo kirimo, sibyo? Biri kumvikana. Even here, this is witeranyije gusubiza kuri ya cost yawe watangiranye. So nkaza nkazishyiramo hano nazo 18, 20. So tuze kora material handling. Material handling yabaye duhaye iyo turi bugendereho iri given. Material handling, they say to go with the number of requisitions. Number of requisitions is 600, 900, 39. Ikanzandika nga nzijyane nzifite 600 plus 900 plus 900 plus 3980. Nshaka kujyana ibi ngibi bifite, ngomba kugenda nyifite. Okay. We go to material handling. Nshaka myandika ahangaha. This is material handling. Iyi nayo turayirangije ya machine hours. Kuri material handling. Material handling, we go with the number. We go to number of what? Number of requisitions. No requisitions. So the total cost of it, if you have seen it, will have is this 140. Here. So the hano ndi calculating. If you have a question, yes, you can ask if you have a question. All right. So the material handling, turebe igisigo cyayo. Cost per activity bingana. Okay, it is 54. Take this over 5480. Iyo niyo material handling yacu. Cost per activity per number of requisitions. Per number of requisitions. So, oh Jesus. Dukore allocation yayo n'ibisanzwe nabyo. So this is project 1, second and third. So nta kintu ufata iki ngakuba 600. I will take this times 900. I will take this times 3980. Oh, what have I done? This is wrong. It is this times 3980. If I have done 3980, yeah, that's correct. So if we add it, it has to give me the same solution, 14250. So nkaza nkabyandika uko biri nyine mo hariya. The second, the third one is this. Ko biza kuza guhinduka in case tugiye cyo gusiba. Inspection. Inspection nayo cost turayifite. Total cost ya inspection ngiye. Kanjyane hano tugeze kuri inspection. Ubwo turayirangije tujye kuri inspection. This is inspection. You have to go with the number of inspections. Number of inspections. Inspections. So what you have to go with. So this is total cost. And it should be total cost per activity. The number of activities we have in inspections. Kuzibona dufite 200 plus 500 plus 5360. So the figure we are having $80.60. So it is this over $80.60. This is the figure. Then I go to allocation. Can you allocate ahangaha ngo bigaragare neza? Okay, ibice bibiri. So ndafata iki? First product, I will take this, then I multiply by 1,200 and get it. So I can get the cost per activity into 1,500, 1,500, and here the same story times 5,360. So if I add it to check on whether what I have there done, there is no error. So the summation is 233,750,000. All right, so I get it. I can come and put it here. This is 14 marks. Oh, this is not correct. I have to put 43. Then here, no, it's not 55. So I can determine the total overhead. Total overhead, which is this. This is total overheads. Okay. This is total overheads. So if I add it, it should give me that 935 million. Okay, that's what it should give me. So this is the total overhead. So we determine total production cost. Total production cost. So which will be equal to 31,500 into 87,000. So we'll be getting the total production cost divided by unit produced. Unit produced. Remember, our unit produced, we say it is 30,000 here. Here we say it is 50,000. And here it is 280,000. So we can get unit cost or cost per unit. Cost per unit is this over this. You see, we're getting the cost per unit. That is what they ask us to determine. Okay, cost per unit is this. So tugashyiraho harmonization yacu 2 decimal point or 1 decimal point. This is cost per unit. Need so ukaba consistent nyine. So za bice bibiri nibyo twiyemeje gukoresha. So this is cost per unit. I'll be having. Okay. Hano se mugiye mu kintu gikomeye kirimo. Nta gikomeye kirimo. Let me charge the laptop. Let me charge one laptop a bit. 1 minute. Okay. This is what we were supposed to do. This is cost per unit we're looking for. So let's determine. Tushaka no cost per unit using absorption costing. Nayo bayitubwiye. Okay, iyi ni ABC. Dukoresheje ABC. Let me everything put it here. Let me confirm. Niba nta hantu birinkinze. Because there's something I want to do. So my figures should not be linked. twirinde ko biza gucenjinga. So nshaka gufata ibi twabikarikiretinze, nshaka gushyiraho hano, this is ABC, ABC system. Okay, ABC approach or method. Let's go to active absorption costing. Okay, I cannot change even, but I can go here. Oh, sorry for that. So let me do absorption here, absorption costing here, absorption costing. Dufite avoid absorption rate, tuzi na machine hours. Iyo amanota yihuse aba yiyanditse, because it is simple. This is it, our product. Nk'ibisanzwe n'ibitiro bya nagutya byakabaye ntacyo turi buhindure direct cost. Direct cost ntabwo ziri buhinduke, gusa mwabonye ko zihinduka, igihinduka ni overhead. Control za portioning. There any question? Let's say, so the absorption costing is the conventional product costing. Yeah, it is that. Now direct cost nyine ntabwo zihinduka, ntabivuze, ahubwo ikiri buhinduke ni overhead zacu. Overhead nizo zigiye guhinduka, tuzaba in general, niyo absorption costing. So dufite OAR, overhead absorption rate, twabonye ko ari kangahe? Twaduye ko ari 500 per machine hour. So tuyikora location, kuko bayiduhaye ni ukuyikora location, nicyo gisigaye cyonyine, nta kigoye kiri mu gihe kuyikora location cyonyine. Ndaza ndayifite, this is 1 francs. Nyuma cyangwa hano baba bakorohereje nabo ushaka kuyikarikiratinga, kuko bayikwihereye, icyo ukora ni ukwaruketinga. This is for product 1, 2, 3 and 4, sibyo? So for our product, so ukuntu bigenze ibi, for this product, you know what is machine hours. Okay, mwibuke ko kugira ngo 500 harimo machine hours iyo kuri buri product, murabyibuka. Machine hours ngizi twazibonye 90, 100 gutya, ibi byaduhaye 500. So ngifata 500 ngube 90, mfata 500 ngube 100, mfata 500 ngube 380. Ahita mbona the cost to put it there. So automatically take 500, then I multiply by this 90, get 45. Also here it is that 500, nomubyibuka, then I multiply by 100. Here also the same story, to be this times 500. So mbiteranyije mu kubyara ya total overhead yanjye, sibyo? So ubwo ni aha ngaha, total production cost, total production cost. Is this, yeah, the production cost is here. Remember unit produced, zose tuzishyiraho tuzigabanyaho. Unit produced dukeneye per unit. Unit produced, then cost per unit. Cost per unit. Unit produced here, it was 30,000. 30,000, 50,000, and that was 168, sorry, 280. Here we don't need to put a comment, you see. Then cost per unit would be this over this. And even if they say to comment, you should comment. If they say, what have you realized when you do this analysis? You comment on the prices, but on ABC, you see you have more insight on. You see all this cost. This has a more cost because it has more units they produce. But also what causes this cost to increase? What has high percentages? See what has high percentages in the machinery. So what causes the machinery to increase? You know what causes of it. Okay? That's what we'll be talking about. So if you want to reduce the cost, where do you need to focus more? On what consumes more. Okay? That's it. Then in your absorption costing, this is cost per unit. And also here, it is our this is our 14 marks. So we end it. Let's continue to the second costing method. Okay. So this question is ended. Let's go back to the presentation. Can you see the screen? So part A we finish. We continue to the second costing method, which is target costing. Can you see my screen? Please confirm. I am on presentation. Can you see target costing?
Yes.
All right, thank you. I came from the Excel file, so I go to present PPT. Now let's go to target costing. Target costing is also another costing method. We can cost a product by using target costing method. So now, what is target costing? When you talk about target costing, this is about, first of all, we change our mind of thinking that the total cost of, we need to change our mind in terms of thinking like the total cost determines the price. No. Now, when you use target costing system or the target costing approach, it tells us that let's change the way we see the cost. Then say that if the people are willing to pay you for the product you produce, let's say 4,000, so you start on a selling price. You see the willingness of your customer, they are able to pay you 4,000. So what is the cost should you producing at and allowing you to get a profit? That's about target costing. So now target costing, let's read it. They're saying target cost is a cost estimation, but derived by, with cost estimate, we get a cost by subtracting a desired profit margin from a competitive market price. So it is sometimes referred to as price minus costing. Target costing, there was a target selling price, then we remove target profit. Okay, so target cost is used in both manufacturing industries, and you can also use it in service industries. Target cost allows the company or allows the firms to focus on which cost can be reduced and where do we need reductions. So reductions must be seen in both contexts in terms of quality concern as well. So this will involve product comparison with the competitors used to set the competitive market price in the first place. So the real world users of target costing, we have Sony, Toyota, Swiss watchmakers, and others. But these are the users of the target costing, a famous one. So the target costing has its greatest impact on the design stage of the product. So because a large percentage of product life cycle cost will be determined by the decisions to be made early in its life cycle. So the target costing approach is to develop a product, determine the market selling price, and desired profit margin, which will result into a cost. Then those costs you have, it must be achieved. That's why you say target cost you are targeting to achieve. So now, target costing, the steps to implement it. Let me first come here before I go to the steps. We say target cost is equal to target selling price minus target profit. So how do you get this target selling price? In a normal situation, the company, to apply this target selling price, they go to market, they do market survey and see if they do market survey and see if we bring this product on the market, what are the price the customers are willing to pay for those products? That is what will give you selling price. And then there is a policy of an organization that might be saying that our profit we need on each product, let's say we are taking 25% as return on investment, or we take 25% margin. If we say margin, it is on selling price. If we say markup, it will be on a cost. But you will see the policy of the company. It might be return on profit, so return on investment, or it might be a margin. Okay. Now you remove that profit, then you get your target cost. So now the steps to implement target costing, you need first of all to determine a product specification. This is why you specify I need to produce this product, okay, and I will sell this money. You estimate the volume of what you are intending to sell. Then step 2, you set the selling price at which the organization is able to achieve will be able to achieve a desired market share. Then estimate the required profit based on a return on sales or return on investment. Then calculate the target cost by taking the target selling price, then remove target profit. Then step 5, you compute an estimated cost. You do a cost estimation. You get it? Step 5, you have to do a cost estimation of a product basing on the anticipated design specification you have in place and the current cost levels in your industry or in your farm. Then step 6, you determine a cost gap. You estimate the product cost minus the target cost. So, okay, what does it mean? The cost gap is the difference between the estimated cost versus the target cost. So you will take estimated cost, you compare with target cost. So if you have any difference, if you have any gap there, you have to make sure, that is when you go to step 7, you have to make sure that you are closing the gap. How do you close the gap? You can negotiate with the customers before making the decision about whether to go ahead with your project. So you make all the effort to close the gap. So we have so many things you can do to close the gap. Now, management can then set the benchmark for improvement towards the targeted cost by improving the technology and the process. So various techniques that can be employed to reduce the gap or to close the gap, to shut that gap down. We have number 1, we can reduce the number of components we are using in the production of that product. You can reduce the number of components. It depends on the gap you have. And the second, you can use standard components where possible, and you can train your staff to use efficient techniques that will help you to save or to reduce cost. And you can use different materials where possible. That is about cheaper materials, the material that is not expensive, or that can be substitute to what you have. So it can enable you to close the gap. Then use cheaper stuff. You can use the stuff that is not expensive. You can acquire also the more efficient technology. You can cut out non-value added activities as well. You see, if you cut any non-value adding activities, it will help you to remain with the necessary ones. You'll be able to have your product. And again, after you have your product, okay, you'll be able to have your product. And after you have your product, and those non-value added activities have been cut off, so it is no longer be causing a gap to you. It might be causing causes of a gap. Okay. Imagine the examiner might sometimes not ask you what are the ways to reduce this gap or recommend the ways to reduce the gap. I know you will say this, but if they ask you what causes those cost gap, these are it. It might
Ko nari kumwumva.
turiho twumva pe mwarimu sinzi ko nagiye ushobora kuba ari network issues
Maybe.
I'm sorry, I was out. I don't know what happened. I was speaking and didn't know that he was out. Anyway, I come back. Let's continue where we were. Okay. So on our presentation, I was to go to this example. I hope you can hear me well. Okay, I hope you can hear me. So this example they're saying a toy manufacturer is about to launch a new type of bicycle on which it requires a return on investment of 30%. Building and equipment needed for production are to cost US dollar 5 million. Expected sales levels are 40,000 toys per annum at a selling price of 67.5 per toy. Costs are currently estimated to be USD 32 per toy required. What is the target cost for annual production? You see this question? After this one, we shall look at these implications, life cycle, then we go to past paper. Here you have question on past papers, okay? That's what we'll be doing again. So let me go to the question first. We understand. Then we shall go to past paper again after this example. Okay, after this example, we cover life cycle costing. Let me present. We are now on target costing. Let me go to Excel. I hope you can see the Excel has come to your screen. You can see it. That is where, our working document is Excel. Okay. But when you look at the question, you try to understand what is required to you. Of course, you have read the question. They say determine target cost for annual production. That is what your objective on whatever you're going to work on here. It is target cost for annual production, and you have to note that target cost. What you should think in mind it is this. It is selling price target selling price minus profit. Get profit. Target profit. That is about target cost. Okay. Now, in our question, do you have selling price? Okay, you analyze and see what do you have. You see, we have building, return on investment is 30%, and you have building and equipment. So which means building and equipment is part of our total asset investment. Okay, or the asset employed. Then expected sales levels are 40,000 per ton. You have a selling price, which is 67. It is for annual production, not for one unit. It is for annual production. Okay, target cost for annual production. We can determine target cost for one unit, then we multiply by the whole 40 toys. Okay, but we have target selling price, which is 67. You see, we have depending on the question, the data we have, we can use it in two approaches. We can determine per one unit, then I multiply by target cost for one unit, then I multiply for the whole production for the year, which is 40,000 toys. So 67.5, it is target selling price. Then I'm going to remove, okay, let me say, this is my target. Okay, let me not say target. Let me say selling price. Selling price first. It is this. Okay. And then, do I have profit? Profit, they say, the toy manufacturer is about to launch a new type of bicycle on which it requires a return on investment. What do you think by return on investment? Okay, return on investment. It means they take a profit, okay, they divide by investment or the capital employed, then they multiply by 100, they get 30%. So our return they're talking about is a profit, which is the type profit we want here now. So it means to get our return, the profit, we can say it's 30% times our investment, which is 5 million. Okay, which is 5 million. So this one is going to give us 150. So 1.5 million. This is 1.5 million. Okay, this is our profit. It's 1.5 million. So now This is for the whole year. That is the return on investment to get. And you know, expected sales level, it is 40,000 per toy. So profit per unit. Profit. Oh, okay. Let me not complicate my life. I can say this selling price. It sales will be 67.5 times the 40 toys. Then I remove this 1.5, get it as a profit. So if I take this and I multiply by 40,000 toys, it can also give me a solution. Okay, let's say annual sales volume 40,000 toys. So if I multiply it together, it can give me solution here. This is sales. Revenue, sales revenue. So if I less profit, which is 1.5, it is this. So I'll be getting target cost. Target cost for annual production. Okay. Which is equal to 1.2. So aka karaka working kalifasha kubona profit. So target cost for annual production is this. Gushaka target cost per unit. Nayo batubajije ko nitwe dushaka kubikora target cost per unit. Nubwo batubajije. Ubwo twahita dufata this one tukagabanyaho 40. That is 30. There you go. 30. Now, it is 30 per toy. Equal to 40 toys. Target cost for annual production. That cost for annual production. I can do like this. I hope this is easy to understand. So they say, currently cost are currently estimated to be 32 per toy. Nubwo twaje ngo dushake na cost gap, ako twabyize ukuntu bayishaka. So can we determine cost gap there? But we call it 32 per toy. Can dushake cost gap. Cost gap twako dushaka dute? Dufata estimated cost. Yego, iyi ngiyi ukuntu ushobora kubona estimated cost ni ya cost estimation sheet, ni ya cost statement uri bukore ikaguhereza cost estimated cost yose cost estimation. Yego, noneho ukayikompara na target cost yawe tubona ya gap minus the target cost. So bivuze ngo cost gap here it will be estimated cost is 32 nkuko hari batubwiye minus our target cost which is 30. So a gap is there of how much? Of 2 francs. It is dollar. It's dollar to USD per toy. That is the answer we are talking about. Okay, this is the answer. Let's continue. This is the answer for this question. So now, what are the implications? These are the simplest one we have done, okay? But what I can say is, what are the implications, okay? What are the implications of what? I see the screen is preventing me from seeing something. Okay, what are the implications of using target costing? The first implication is they are saying target costing require managers to change the way they think about the relationship between cost, profit, and the price. Okay, that is where I started on. Target cost, it requires us, first of all, to think like cost plus profit equal to selling price. No. Now we are changing. We want to see what the price the customers can give us for this product, what the price customers are willing to pay for this product. So it means you start setting a competitive price. Then you come back to your organization and see if this will be the selling price, what would be the cost? Okay, that's why we need to change the way we think about the cost, profit, and price. Then traditionally, the approach was to develop the production cost of a product, we set a selling price, which it might be bringing a loss or profit depending on the what will happen on the market. So the target costing approach is to develop a product and determine first of all, okay, first have an idea, you specify your product, then determine the market is selling a price. Then you remove the desired profit or the profit you want to get from those product. Then it will give you a cost you should be achieving, you should be producing at the desirable cost relating to the selling price needed on the market, and the desired margin is also included there. Now, with the target costing, we focus on, our focus is on the price leads to a costing of a product. Then customers' requirement for quality, cost, and time, it will be incorporated in the product design, okay, in product description, in product designing, and also process decisions. So the cost control will be also covered, will be also emphasized when you are at a designing stage. When you are still designing your product, you also emphasize the aspect of cost controlling, okay, before you start even to produce. That is implication of using, switching to the, or okay, implication of using target costing. Now, okay, life cycle costing. Target costing we ended. We'll go to life cycle costing. Life cycle costing, this also is a costing approach that tracks and accumulates the cost incurred for production of the product and all the revenues incurred for the product attributable to each product over the entire product life cycle. So a product life cycle costs are incurred from its design stage through development to the market launch, then production and sales, and finally to its eventual withdrawal from the market. What does it mean? Remember, the product has a life cycle. We can say the product has the lifespan. This is when it is in idea. That's why you see this line here. When it is in idea, you develop your idea, you go through the research and development, you keep researching whether your product will be feasible, okay, whether what you produce will be giving you some money, is now will have a customer. That's what you think. It is in your thinking. You do research and development. Then you introduce it on the market. So when you introduce on the market, when you look at this, when you introduce on the market, okay, you might make some revenues. You say here it was an idea, then you introduce on the market, you produce and you go to sell on the market, you make some revenues. You see the revenues are less. These are sales revenues and the profit. You remember the high sales, the high profit. So these are some revenues you are earning at the introduction stage. And as more you are growing, okay, the more you are growing, there is a growth of your sales revenues and profit as well. The time is also moving. You go to second year, third year, fourth year, like that, like that. So there is some cost you are incurring for you to grow. You are incurring marketing, okay? You are doing the marketing of a product. Any promotion cost, you are providing the discount for the people to buy it, okay? Like for you to grow, you'll be having here aggressive advertisement. Then you go to maturity of the product. This is when hari igihe product ikura, okay, tuvuge ikajya kuri market ikaba izwi cyane, ariko sales zayo zikaba zitari kumuvinga cyane, nyine zisa nkaho ziri steady. It is moving like it is now, and we can see it is at the mature stage. Then noneho bigatangira kugira sales zikangira ikagabanyuka kubera ko product ifamira on the market itangira kugabanyuka. Here what you should think, you think about doing update of it, okay, doing update of your product, then redesigning of it, or another way you can boost your sales, or you can develop another product and you bring it on the market. So it has its life cycle. So then it go to declining. That is the life cycle of a product. Then all the costs we incur here, and even the revenues, we consider them in life cycle costing. So this is like an example. This is a specific industry that uses a life cycle cost, and this is an example I took where 50% is consumed in energy cost. This is for the whole life cycle of a product. They have estimated that 50% will go to energy cost, and this yellow, it is a maintenance cost, and this can I say dark blue, so it is environmental cost and the initial cost. You see, actually what I want to highlight here, it's not about these percentages. No, I want to write these are all the costs that will be required for your life cycle product. There is energy cost, maintenance cost, environmental cost. These are costs to prevent, let's say, to comply with the environmental regulations, like to prevent environmental pollutions. Okay. Then initial cost, when you go to market, or when you put it when you go to market your product, or when you put it at the first time on the market, you can advertise whatever. These comprise initial cost, the downtime cost, disposal cost, operating cost, installation cost. All of these are the costs, and these are the examples of the percentages it takes. Okay, these are life cycle cost. All of these costs, we consider them, we add it, we accumulate them, then we can determine our cost through the life cycle. So now, life cycle cost analysis, when you look at this graph, this is like a method used to evaluate the total cost of an asset, okay, or the total cost of our product over its entire life over its entire life. So not just the purchase price. No. Don't consider what you know what you say to produce this product. It required me only to do this up to production. No. Or you have this asset, the cost of it is purchase price. No, that's not about life cycle. What you should think is this: you need to accumulate all the cost as you see here. If there is any energy that will be used for that, let's say machine, it is need to be considered. For any environmental cost, any initial cost, any downtime cost, any disposal, any operating, any installation, which will be comprising under your cost analysis when you're using life cycle costing. So instead of asking how much does it cost to buy, okay, this machine, life cycle costing, that is the LCCA, that is the life cycle costing analysis, asks, okay, this is the thinking of life cycle costing analysis. What to ask ourselves, we should ask ourselves how much will this asset cost from the purchase, from in the use, okay, up to the use, we do the maintenance, and even to the disposal. The same as product, how much will it cost from the introduction of the product, from the idea, once we're doing research and development, to the introduction to the market, when it is on a growth, when it is at maturity, all the costs to be incurred, we need to consider them, and even disposal of those. Disposal is not about disposal revenue, it's about disposal cost. Okay, then what the analysis is doing here, the life cycle costing breaks the total cost into stages. So initial cost, that is about buying of the asset, whatever you need for your production, installation of the cost, so in terms of setting up, operating cost, maintenance cost, and even downtime cost, energy cost, environmental cost as well, and disposal cost. So then you calculate which costs are most significant over time. So on this pie chart, it shows us how the total life cycle cost is distributed. You analyze at the end of the day, if you are using the life cycle costing, I talk about the reward system, how it works when you're using this life cycle costing. I talk about it when I was introducing the session. So the energy, you analyze what will be the most significant cost over time of your product. So on this pie chart, we have seen that the life cycle is distributed as energy is having largest part, 50%. The initial cost is having 10%, operating cost 10%. Then other costs in terms of maintenance, installation, downtime, environmental, and disposal, it has smaller percentages. It is ranging to 5 to 10, like this. You have 5. So those are other costs. Now, this pie chart is teaching us a powerful lesson in terms of life cycle costing. So the purchase price is not the main cost. The cost of production cost is not the main cost of product. Okay? If we say cost per unit is this, no, that is not only the main cost when we are on life cycle. Okay? Energy cost, you see, it is dominating as it has 50%. So if you are making decision, it will be wrong approach to say that this machine or this asset or this product is cheaper, so it is better, let's do this. When you base on only one day, when you base on only one cost, That is wrong. So the correct life cycle costing analysis approach, it says that this asset, this product, or this machine is using less energy over time. So it is cheaper now if we go through it, or it is cheaper now overall in general. Okay. Then the implications of life cycle costing. Implications of life cycle costing. Life cycle costing has implications on pricing, even performance management of the company or of a division, and even decision making. It will also affect a decision the people should take. So with life cycle costing, any non-production cost, it can be also identified to individual product over its complete life cycle, the lifespan. So the first implication, they say that the total of these costs for each individual product can therefore be reported and compared with revenue generated in the future. I remember this was the question in February 2026, the last sitting. The same like this, they ask the implication of life cycle costing. So you would have answered this. Then the visibility of all of these costs will be increased. All the costs to be incurred, you are able to trace it. When will it incur? So what should you do? Then individual product profitability can be better understood by attributing all the costs of the product, all the costs to its product. So as a consequence, the more accurate feedback information will be available to the organization's success or even failure when you are developing your new product. So in today's competitive environment where the ability to produce new product or updated version of your product you already have is needed for you to survive as an organization, this lifestyle costing is very, very important for information, for giving you more insight on what will drive your product and when and what should be done. When to do that things and what should be done on this each level and what costs are being incurred. So the information is very, very important. Now, let's look at the question 3, 2020, December 2020, question 3. December 2020, question 3. It was asking, the whole of it was asking on life cycle and target costing. Okay, that's what we're going to work on. They're saying, you see here, we have it here now. Let's go to requirement first. The requirement is asking us, examine the whole life cycle. I hope you can understand me. Okay. I hope so. Okay. They're saying, examine the whole life cycle of the digital radio and comment on the suggested price by the CEO and comment of the financial director. That is 6 marks. Using the target costing approach, assess whether there will be any cost gap that may exist based on the price suggested by the marketing director, 11 marks. Part C, discuss why it will be important for Mapesa company to monitor the financial aspect of the performance as well as financial performance. That is 8 marks. But okay, for the first two, 11 marks and 6 marks, we are okay. And for the third one, these are explanation for why do we need to monitor non-financial aspect of performance and financial aspect of performance. We have not yet learned this, but it's okay. I will answer it because this is simple to explain non-financial and financial performance. So far at our level, we can answer. Okay, it doesn't require us to go and read the notes. Okay, because we are in revision, so it is assumed that you have already studied. What I'm doing now, I'm talking about the topic. We have now the common understanding. Then we can work on a question. What is the question requiring us to do so? How do we approach those questions? How do we do on a question? What are analysis needed? What are the technical expectations the examiner is needing or is requiring us as a student to have? All right. So let's look at the question. They are saying that Mapesa company, I'm reading here from right to left. Okay, from left to right, sorry. So Mapesa company assembles and sells many types of radio. The company has well-established accounting system. The management accountant of the company is pleased with the management information system, which is in place, and is particularly proud of budgetary control reporting system, which provides monthly control reports to the board within 1 week of the end of each month. The company is considering extending the product range to include a digital radio. The radios are expected to produce better sound quality than traditional radios and have large potential additional features not possible with the previous technologies. It expects the new product to have the following cost to the end of its lifetime. We have year 1, year 2, year 3, year 4. Product and sales volume 200, 15,000, 20,000, and 500 on year 4. In the figures are in 1 francs, so 3 zeros are ignored, are rounded off. Not ignored, are rounded off. Then we have research and development costs in the year 1 and year 2. That's right. We can keep doing research and development after we are having a product, so never need it. So it is in early years. That is when the research and development cost happens. Then marketing cost, we have it also here. Production cost per unit here, and customer service cost per unit here. We have disposal of specialist equipment. We also have it at the last year of the product. Then the chief executive officer believes that customers will be prepared to pay 1 francs 10,000 for a digital radio, but the finance director believes this will not cover all the cost throughout the life cycle. The new radio is to be produced by assembly workers assembling a variety of components. Production costs are currently absorbed into the product cost on an assembly labor hour basis. Mapesa company is considering using target costing approach for its new digital radio product. The cost information of the new digital radio is as follows. Circuit board. This is brought in. This is bought in, and this is bought, not brought. This is bought. Okay, this is purchased in. And the cost per unit is 300,690. They are bought in batches of 4,000 units, and an additional delivery cost per batch are 2,106,000. Wiring. On an ideal situation, each complete radio requires 25 centimeters of wire. However, there are wastages expected in the assembly process, and the company estimates that 2% of the wire purchased will be wasted in the assembly process. The wire cost 450.8 per meter to buy. Cover material. The material for cover of the radio costs 7,290. Assembly labor. These are skilled people who are difficult to recruit and to retain. However, Mapesa company has more of this stuff, but is prepared to carry this extra cost for the security of the business. So it takes 30 minutes to assemble one radio, and the assembly workers are paid 1 francs 11,340 per hour. It is also estimated that 10% of the hours paid to the assembly workers are for idle time. Production overhead. Recent historic cost analysis has revealed the following production overhead data. Total production overhead in 1,000, month 1. They say total production overhead in 1,000. You know why I'm saying this? It's because I know sometimes the student try to attempt to answer, but you mix the information the way it gives you the information. Okay, the way it wants to connect the information. Okay, let me say in this way. Sometimes we read, but because we are in hurry, we ignore something, or we tend to generalize. Stop those questions of generalizing. Please be specific as per the questions is. They say total production overhead, it is in thousands. When you are on overhead, that is when you are in thousands. Okay? But when you go to this total assembly labor hours, it is not in thousands. All right? They say month, we have 55, 800,000 in month 2. There. Total assembly labor hours, we have also month 1, and you also have month 2, like this. Then fixed operation overhead are absorbed on an assembly labor hour basis based on normal annual activity levels. In a typical year, 240 assembly labor hours will be worked by Mapesa company. The marketing director, The marketing director has suggested that they should set selling price of a new digital radio. Okay, allow me to do this. And I see here something is not okay. I hope you can read it well. Okay, some word was actually being not seen there. So now the market director has suggested that they should set selling price of the new digital radio at 1 francs, 39,600, in order to compete with a similar radio on the market that has comparable features to the company intended product. The board has agreed that the acceptable margin should be 20%. The market of digital radio is growing at a reasonable rate, but there are 3 competitors in the market. Competition is strong and consequently profit margins are going down. So the marketing director is certain that although low prices are one factor in the buying decision of customers, so customers are much more concerned about the quality, reliability, and functional features of the digital radio that Mapesa company will produce. At the recent board meeting, the board made 2 important decisions. The first decision was not to invest in a new equipment that would significantly reduce the water and energy consumption in the production process. The decision was based on discounted cash flow return on investment, which was considered insufficient. The second decision was agreement that costs needed to be reduced to improve profitability in relation to this board. The board decided that employees in production should be empowered more and should be given some authority to take decisions affecting production operations. Requirement now: examine the whole life cycle of digital radio and comment on suggested price by the CEO, and you comment, and you when you are suggesting, when you're making a comment on this suggested price, and also remember to look at the comment of the finance director. They give you 6 marks. Then part B, they say using technical costing approach, assess whether there will be any cost gap. So they're asking us to determine a cost gap that may exist based on the price suggested by this MD. So it is 11 marks and this 6 marks. Now let's solve it. Let me go to Excel file. Then put the question in Excel so we can work on it there. So I'm putting the question in Excel. All right. I hope you can see my Excel file. Can you see it? Can you confirm that you can see my screen? So we are going to work on this. Please say,
Yeah.
All right. Let me, so requirement number 1, they say to determine to examine the whole life cycle of this digital radio. So we're going to answer part A. I'm gonna say life cycle cost of digital radio, digital radio life cycle cost analysis. I think that word can also be good than what I was trying to write. So I can say now digital radio. There's no marks for this. Here we're spending time for nothing. Digital radio life cycle costing analysis. Okay, now you see we need to put, we have years, we have year 1, year 2, year 3, and year 4. That is the lifespan of this project, of this is not a project, it's a product of this product, of this radio. So we have where to start on. You see, here I'm going to put details or particular or items. Then it is here 100 francs. Then 3 zeros we have to ignore. We can ignore or not. I don't have any issue about it. If you ignore, it's okay, you have your marks. If you don't ignore, also you have your marks. There is no crime. Okay. If you do whatever you want, you can ignore or not. Okay. Now let's go to units. We put here units you are producing on each year. Here it is 2000, and here we are producing 1.5, and sorry, it is 15. Sorry, it's 15,000. You know, 1.5 it is 15,000, and here it is 20,000, and here it is 5,000. Okay, this is 5,000, and now we need to put. You see, we have production and sales volume. These are our units produced to be produced. Then we have research and development. The costs are given. Research and development. We have to put R and D costs. Costs. You know, when it comes to lifestyle costing, these are the easiest marks everybody should be getting. Easiest marks everybody should be getting. Okay, so we should say now 38,000, and here it is 2,000. So 3 zeros are ignored. Please note it. 3 zeros are ignored. That is research and development cost. So we go to marketing cost. Marketing cost. Our marketing cost, you see, we have 2,000, have 1.5 thousand, 1,000, and you have 200. Now we have production cost per unit. If they say production cost per unit, we need only simple analysis. Production cost, I will not say per unit, I will say production cost only, because I don't need it for 1 unit, I need it for the whole units they produce. It is 10, and they say per unit, so I have to multiply by the whole number of units to get it for these units. Okay, so the production cost for the whole units, so to be 10, I can say we don't need even working. Why do we need the workings? We need only to multiply like this because it is straightforward, times this 2,000. This 2,000 is 20, and here it is 9. In the second there it is 9. Okay, here I can say 9, and here it is 8 and 9 again. 8, and here it is 9. So let me multiply by the numbers of by unit produced. Times 20. Here I will multiply also by 5,000. So this is it. Oh, okay. Now that is my production cost. 3 zeros are still ignored. So we have customer service cost per unit. So we need the customer service cost for the whole unit now. So we can say customer service, not this is customer service costs. Customer service cost. So we have 1, 0.8, and okay, it is 1 and 0.8. So here we have 1 times it is per unit. So I have to multiply by the units used, and here it is also 0.8 times this 15,000 units. I get it, and also here be the same. It is 0.8, 0.8. Nothing changes. It is 0.8, 0.8. Then disposal of equipment. Okay, disposal. This first one, the last one, disposal of specialist equipment. Disposal of specialist equipment. In the last year, 60,000 for the total cost. And if we forget here to put something total, hano naho tuhashyira total biradufasha. I think we can make a table now. We put in a table, it can help us. Okay. Then here 3 zeros. The whole unit, the total of all these units. Ngende gushaka sibyo hano dushyiraho total naho tugaragaza total of the whole units ibisanzwe. And then research and development cost. These are the totals. Okay, these are total units. These are the research and development cost. These are also the money. Hey, here was it 38? Let's confirm. It was 38 research and development cost for the first. It was 38. Okay. Now we look at the total cost. That was what I was talking about here. The total cost. Need to add only the total cost. Okay, this unit is not there. Okay, let me put things like this. This one is not there. The units are not there. Okay, the units are not there. We're talking about only this cost. These are the costs we're talking about only. Okay, and this is 62,000. So I go like this, and I summarize it here. Now we can tell total cost per unit. Cost of a radio. Cost of digital radio. Digital radio. Total cost. Cost. Okay, total entire life cost. Total entire life cost or total life cycle cost. Then I will divide it. Let me say this. Let me put a division. Divide it by total entire units produced. This entire life. And also determine our total cost is this. Okay. Total cost will be this. Ntabwo ari izi ngizi, iyi ni umwaka umwe wa kabiri wa gatatu wa kane, ariko izi zose ziteranyije urabona ko total cost entire life izi zose tuziteranyije zingana iyi figure 498,700 498,700. So the whole units equation. I see here some people have question. They say, so disposal is a disposal of specialist equipment be given per unit? It's not per unit. They say disposal of specialist equipment. They give us 60 only. Look, they say disposal of specialist equipment. Oh, it is 6,000. It is 6,000, not 60. There is an error of additional 0. It is 6,000. It is 6,000. Yeah, 6,000. Not that. It is 6,000 only. Sure, it is 6,000. Okay. It is 6,000. Now, we divide by the whole unit. The whole unit is this 42. Okay. This 42. It was 6,000, not 60. Okay. Here, say disposal of social equipment. Yeah, it is 6,000, not 60. Then we divide by 42. So we'll be having now the cost of a digital radio. What is it? It is 10. Remember, 3 zeros are ignored. Okay. So it is 10, 26, and then francs. We can now go and comment. We're going to comment and advise accordingly. So let's look at our question. What was it saying? our the comment of look, the requirement was saying, if you remember on the requirement was saying that examine the whole life cycle of the radio and comment on suggest the price by the CEO and the comment of the financial director. I'm going to examining life cycle of the digital radio, and we want to comment on suggest the price. So what was the price there in a question? That's what we are talking about. The price in a question. The price in a question. They said, look, the chief executive officer CEO believes that customer will be prepared to pay 10,000. Okay, and if you multiply by 1,000, this price I'm going to use it will be this. Then you multiply by 1,000. You see, it should be 10,588. Okay. Okay. Here you say what? I think it was the cost to dispose, not disposal amount as. No, my friend. Disposal is a cost to dispose equipment. Imagine if, let's say, you are producing like a cement somewhere else. If you are withdrawing your product, the disposal of those things, it is a cost. It is not disposal revenue. No. Please remember that. That is a disposal cost, not a disposal as a revenue, as you know, in a financial reporting or whatever else you have learned. This is not a disposal value. It is a disposal cost. So this is a figure. And remember, the CEO says, okay, if I can write, the CEO says that customers are able to pay 10,000, okay, francs per radio. Okay, and look at this. They say will be prepared to pay, are willing to pay 10,000 per radio, but the finance director believes that this will not cover all the costs throughout the life cycle. So who is correct now? So it means that the CEO says that customers are able to pay 10,000 per radio, but CFO refuses and says because it will not cover the life cycle. And you have seen that it is 10.588. What does it tell us as a comment? We should say that as a comment. You can see now our comment say the CFO, is it CFO or MD, managing director? It is finance director, not CFO, and even the finance director. Okay, we are finishing. The finance director, the other one will do it afternoon, from 5 to 9, we have also performance. So we'll continue where we stopped today. So the finance director can say was right. The finance director was right to highlight that, or to mention, was right to mention that 10,000 as selling price will not cover. Okay, let me say this, will not cover the life cycle cost as this selling price is below the cost. So there will be no profit. The product will be making. Therefore, okay, conclusion. Therefore, if the price cannot be increased, okay, if the price cannot be increased, then it is not worthwhile to produce. If the price cannot be increased, then it is not worthwhile to produce. This is enough. This is our comment. Okay, this is our comment. Any question? I see a lot of questions here. Okay, we are about to finish. They said the question is the answer times 1,000. Yeah. Well, yeah, I see. Yeah, you are answering it. Okay. The answer here we times we get 10.6, and remember the price was 10,000. So it is 10. We compare the 10 and the 10.6. All we multiply by 1,000, so we get 10,588. So what should be done? Well, as our conclusion, we say that the CFO the finance director was right to comment that this will not cover the whole life cycle as we have seen, because the correct figure, the life cycle cost is 10.5. So they should try to convince the customers that they should increase the price. Instead of being prepared to pay 10,000, they should pay like, okay, you cannot say it is 11 because there's no basis. You say to say 11,000. No. But you should tell them that they should give them the room to increase their prices such that it can cover even this cost. So that is it. Our time has ended. So once we come back, we will continue on the part B. All right. Thank you so much. Have a nice day ahead. So we shall turn back to our session, the second session in the evening from 5 to 9. Thank you so much. Any question before we leave? Any question? I hope all the questions have been answered.